Coming through from China, the surprise in terms of the PBOC, the Central Bank of China, not lowering that key rate. DAX futures pointing, though, to gains of 0.2%. The protests continue in Berlin. Oliver Crook is on the ground with us as those farmers continue, of course, to congregate in the German capital. FTSE 100 futures flat at 7,629, and CAC futures pointing to very modest gains of just 3 points so far. Let's flip the board then and see how all of this features in the open this Monday morning, and see whether if we lift the hood, we get a little bit more interest across the sectors as well, and we'll check in on those throughout this hour. Currently, the FTSE 100 then at 7,627. The futures are pointed to a flat session, at least so far, for the FTSE 100. We look at basic resources as well as a sector, given the pressures that are coming through on iron ore, but it's worth noting that copper prices have picked up so far in the session. Over in Spain, the index there, the Spanish IBEX, is gaining 0.3%, so a slightly better and brighter picture across the Spanish IBEX versus what's happening here in the FTSE, where the gains are coming through just 0.1%. Over in Italy, the FTSE MIB gaining 38 points, just up 1% as well. And over in France, the CAC 40 currently flat, 7,467, just adding a little under 3 points for the CAC 40 over in France. Let's flip the board then and have a look at the sector breakdown as we think, of course, about the relative focus, at least some have called it aggressive focus, in terms of the rate cut expectations from the Fed, expectations from traders that you get up to 170 basis points of cuts from the Federal Reserve starting in March, an 80% expectation, around 80% the first cut comes through from March, but whether or not that is too aggressive in terms of the market pricing is one of the key questions for us. Across your benchmark there here in Europe, a modest gain of about 0.1%, but we lift the hood and have a look at these sectors then. Banks gaining 0.2%, a really big day once again, or at least big week once again for those bank earnings, with Goldman Sachs and Morgan Stanley coming through with their numbers on Tuesday after a bit of disappointment from the likes of JP Morgan and others on Friday. Financial services as a sector is flat. Tech gaining a little bit, just under 0.1%. There's the energy story, though, up 0.4%. Again, we continue to monitor geopolitics, and the Bloomberg reporting that Qatar has rerouted from some of its LNG shipments, but we know that European gas futures are actually slightly lower so far in the session. Basic resources flat as a sector, and some other standouts coming through from the likes of insurance, where you're seeing some pretty decent gains so far, modest of course in this picture of otherwise muted action of just 0.3%. So that's a picture across your sectors, the 12 main sectors we're looking at. Autos taking another little bit of a dip, down 0.3%, and we'll see how that impacts the DAX. Currently the CAC current over in France is flat. The FTSE 100 here in the UK, 7,633, just a very modest gain of 0.1%. Sam Umstead now joining us from our Markets Today blog. And Sam, we're reflecting on the producer price picture. The CPI came in slightly higher than expected last week. Then we had producer prices, so whipsawing the treasury markets, whipsawing the traders, the futures traders, in terms of where these cuts land and to what extent the cuts come through. What is your take on what we got from the PPI print and how markets are thinking about the next steps for the Fed?
So I think what we're seeing at the moment, we're in this kind of phase in between a hiking cycle and likely a cutting cycle. And because of the, all central banks, and particularly the Federal Reserve, have made it very clear that they will remain dependent on data, on what's coming through. And therefore, markets are going to do the same thing. And so as there's these fluctuations in between, and until we get to that first cut where we can start to price in a little bit more of that coming in the future, in between that, you're likely to see these big fluctuations in particular when you get big pieces of data. And so the PPI data, as you mentioned, a little bit cooler than expected, and enough to create quite a big move in what are quite heady markets at the moment.
And in the oil market, Sam, we got back above $80 a barrel last week. We're back down to below $78.
Yeah.
We're at $78.39 now on Brent, $72.71 on WTI, and essentially flat trading across the oil market so far in the session this Monday morning. What are you looking for in terms of the potential next catalyst? We know we have a firm eye, of course, on the Red Sea area.
Yeah, that's right. And I think you've got kind of two competing forces for oil traders to kind of balance out at the moment. So you have the Red Sea, you have the attacks on the airstrikes, the US, coming in with their allies as well. That's kind of raising these concerns of a wider conflict again. And actually, it's worth saying, we were talking about this back in October last year, and throughout the kind of final quarter of last year, it has widened. It has gone out further. So that will remain, front of mind. But along with that is a much softer fundamental outlook for oil. There are concerns about supply, more supply coming through from non-OPEC members, and then also demand, over the course of the year too. So those two things, you might see oil remain quite volatile, but potentially within quite a narrow range.
Okay, and there's a massive week, of course, for Bitcoin and the crypto space more generally last week with the approval by the SEC of these ETFs. Yeah. How has that kind of played out, and what are you watching for within the crypto space?
Yeah, I think I personally sort of expected that as that came through, you would see Bitcoin continue to kind of go up. But actually, it appears that it is a kind of, buy the rumor, sell the news kind of story.
Profit-taking, maybe.
Yeah. Now, I think traders are starting to look at this like, how much further can this push Bitcoin realistically? It does open it up to a much wider market, but they're going to need to see a little bit of data, see how much interest there actually is to gauge that. There was, quite significant amount of trading in Bitcoin as those were launched last week, but it does appear that there's been a bit of a cool down.
Yeah, the inflows were quite solid, weren't they?
Yeah, they were.
Across some of those main ETFs. 42,675 on Bitcoin right now, 2,511 on Ether. Bitcoin just up just 0.4%. Sam, thank you very much indeed. Sam Umstead, of course, from our Markets Today blog. You can get more from Sam and the rest of the team on the front page of the Bloomberg UK website or by typing TLIV GO on the terminal. Here's what else we are looking for this week then. World leaders, policymakers gathering at the World Economic Forum. It's the annual meeting, of course, in snowy Davos, Switzerland. This year's theme is Rebuilding Trust. We also get Euro area industrial production. That's at 10 a.m. UK time today. Bloomberg Economics sees it falling for November, dragged down by the softness coming through in terms of Germany's performance and a dip in Italy's economy. Interesting that the Bloomberg survey now sees 4 cuts from the ECB starting in June. Tomorrow, we're going to have results from Wall Street giants, including Goldman Sachs and Morgan Stanley. But before that, we have UK wage and unemployment data, as well as Germany's all-important CPI print for December. Do the wages, does the growth story, does the labour market story, I should say, in the UK remain resilient? Or are we starting to see cracks in the jobs picture here in the UK? And on Wednesday, we're going to have a ton of economic data out of China after the PBOC, of course, kept that main lending rate on hold. We're also going to have Euro area inflation, UK CPI, UK inflation as well. After that number, the most recent number came in slightly below expectations. And the Fed's beige book as well to colour out and build out the picture in terms of Fed thinking. On Thursday, we have more US data with housing starts and jobless claims, as well as the ECB's December meeting minutes. And on Friday, we hope to hear from ECB President Christine Lagarde and IMF Managing Director Kristalina Georgieva on the last day of the World Economic Forum in Davos. Coming up, as tensions ramp up in the Middle East, Qatar has paused sending LNG tankers through the Red Sea. We bring you the details on that next as gas prices dip lower in the European session. This is Bloomberg.
CFOs are reshaping the C-suite, Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. A new episode every month, only on Bloomberg.
On the heartbeat of the tech sector.
Spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure.
Don't miss Bloomberg's interview with the
This week, Bloomberg is live at the World Economic Forum annual meeting in Davos, Switzerland. As markets anticipate a dovish pivot by central banks, policymakers grapple with two wars on the global stage, and AI continues to dominate the tech headlines. Trust Bloomberg for the fastest coverage and exclusive analysis from the world's top leaders and experts. Continuing coverage this week, only on Bloomberg Television and Radio.
This is Markets Today. We are 10, almost 11 minutes into the European trading session. You're seeing modest gains of about 0.1% when, of course, the US markets are closed for Martin Luther King Day. Across your sectors, energy, top of the list, getting 0.7%. At the bottom, healthcare, just off by 0.1%. Let's check in on some of the individual stocks where, frankly, there's a lot more interest coming through versus the broader benchmark. Joe is here to unpack it all. Joe Easton, what are you looking at?
So we're going to start with a profit warning in the UK. It's Crest Nicholson, one of the smaller home builders, downgrading its profit forecast today, but it does look to be company specific. They're citing rising costs at one development and also legal issues relating to a fire at another property back in 2021. It's coming down 5%, but not seeing too much of a read-through. We had that positive nationwide house pricing data earlier as well, so potentially that is supportive. In terms of Grifols, this one gaining 5% over in Madrid. It was, of course, the big stock mover of last week, and the important news over the weekend is that they say their deal to sell a big stake of the company to a Chinese firm for around $1.8 billion is continuing, and that is expected to close. So that is boosting that stock today, up 4.7%. But take a look at Atos over in France, a cybersecurity company, once again cutting its cash flow forecast. They're announcing that their CEO is changing as well. Very negative for that one. The worst performer on the SXXP today, down 16%. And also in France, the one we had in stocks to watch, Dassault Aviation, weak orders in terms of some of its fighter jets. That one coming down 6%. It's a 15 billion euro company, so that's a pretty big move to that one. Deutsche Bank downgrading their rating on that one to hold. They were a long-term buyer. Pretty much done all the aviation puns, but those investors in the brace position, I'm just winging it at the moment. I think those ones will do for now. Commerzbank up 2%. Deutsche Bank potentially considering a renewed takeover of that firm, though it is in very preliminary talks with advisors. There's no talks currently between the firms. It's just internal for them, but that one coming up 2%. And ABN AMRO was in the same report by the Bloomberg Deals team as well. That one coming up 1.7%. Deutsche Bank was pretty much unchanged. There it is, down just 0.2% at the moment for that one. Software one, this was indicated down 10% in the pre-market indications. We haven't seen a price on that one yet. It may well open as we continue to go through those movers. This is, of course, the company rejecting Bain Capital's latest bid for the firm. It was around 18 Swiss francs a piece. They cut it from 20. That one traded at 16 on Friday. We'll wait for a drop in that one. Should see some headlines on that one on the terminal very soon. Then in terms of one more, I want to bring you this one out of Italy is Saipem. They have been barred from doing new contracts in Brazil due to a legacy legal issue, and that is quite a big market for them. They work with Petrobras. This is in the energy industry, and that's a negative according to analysts. So that one is down 2%. Then in terms of some ratings changes today, a big one over at Morgan Stanley. They're adjusting a lot of their electronics and software ratings today. So one of them that comes down is Cinch. This is work from home technology, communications over in Stockholm, falling 8% as Morgan Stanley goes underweight that one. Then we got Schneider Electric. This one is cut to underperform at RBC. They've had some weak earnings out of France recently, coming down 0.7% at the moment. And finally, Continental, the tyre maker, overweight at JP Morgan. They're also quite exposed to electric vehicles. JP Morgan likes that one, and that one is gaining 2% over on the DAX index.
Okay, Joe Easton from our equity team, thank you very much indeed, walking through some of the key movers this Monday morning. Let's get back to the geopolitics and the read across to energy and inflation then, because Qatar appears to have paused liquefied natural gas shipments, LNG shipments, through the Red Sea. According to ship tracking data compiled by Bloomberg, at least 5 vessels that were heading towards the passage at the southern end of the Red Sea have actually been halted since Friday. So it's another development, of course, in that region. Joining us now is Anna Boata, Head of Economic Research at Allianz Global Trade, a leading credit insurer. Anna, good morning. Thanks for joining us. What then is the broader takeaway in terms of the inflationary impacts? Are we underestimating the inflationary impacts of the disruption now that we're seeing in the Red Sea as freight rates increase and energy prices edge higher?
Yeah, clearly it comes at a bad moment because we are clearly expecting this inflation to continue, and central banks are watching that in order to be able to cut interest rates towards the second half of this year. But I would be more cautious when assessing the impact on inflation, because at the moment we do still have a lot of stocks, be it on energy, be it on goods, and clearly that could be that could give some room to maneuver. At the same time, demand is not so high. Demand is clearly 10% or even more in some sectors below what it used to be at the end of 2022. And actually shipping prices have reached those levels. So I think we are not in the same situation of disruption that could cause inflation in the medium term. That being said, of course, we still see margins of corporates and corporates being able to absorb some of these input price increases if the situation doesn't last for much longer. Now, clearly, half of the capacity has been rerouted, and I think it could be even more. But clearly, one of the risks today is to see a recession in global trade, is to see recession in the manufacturing sector. And we were at least starting to see some green shoots when it comes to global trade after 1 year of recession. Now, if the worst case scenario, which is a full closure of the Suez Canal, would be something that could be implemented in the coming weeks, clearly that would be the worst case scenario, because a full closure of this canal would clearly mean a full-fledged recession of global trade in the next 3 months. So clearly now we are in a situation where we can cope with that for the next 6 months or so without having a global recession that is severe.
Okay, and you talk about, and it's fascinating, you do talk about this ability for some of these industrial companies, some of these corporates to actually absorb these higher input costs. Do we have a sense, Anna, as to how long that is able to continue? To what extent, what is the time frame around the ability of these companies to continue to suck up these higher prices? When does that story start to come to an end?
I think it's a matter of time for sure. So not more than 2 to 3 months, but it's a matter of level of prices. So currently, if the prices remain at current levels, that would mean around 1.8 percentage points for European margin and 0.8 for the US margins. So that would be coped with because margins still stand above 2019 levels currently. But if prices would be to increase even further and go back to highs that we have seen in 2021, that clearly would not be absorbable. And in that case, of course, inflation in the Eurozone will go much beyond 3% and as well in the US. So clearly, we would see much higher impacts on inflation in that scenario.
How much comfort do we take from the inventory buildup, the gas inventory buildup that we have seen in and across Europe? How much resilience, how much of a shield is that for the Eurozone?
That's a very good point because we have now extremely high inventories when it comes to gas, and we have passed the peak, the worst of the winter season, if you want. And clearly, that would keep prices under control. And it's the same also for oil, right? Because we do know that demand is one of the major factors nowadays. And we do believe that oil prices will not go far beyond $85 per barrel. So clearly, when it comes to energy prices, it could be one positive news that it comes at this moment in time.
We had China's deflation, or a reminder of just the deflationary impulses coming through from China last week. 3 straight months. It's the longest stretch for about 14 years. China, of course, attempting to resuscitate that economy. How are you thinking about the China factor, the China piece within this puzzle?
Clearly, that's an important factor as well, along with the inventories, because China is currently exporting deflation and it's cutting export prices in order to reboost its exports. And clearly, that's another factor that could limit the increase in prices for consumer goods or even for industrial goods. So clearly, that's one of the trends that will continue, given the fact that the Chinese economy is still molding through and it's still fighting its deflationary trend, and it's still fighting the consumer not being really supporting growth as we would have expected last year, and some policy moves that are clearly a bit lagging nowadays, and we have seen the pause in interest rate cuts that everybody was expecting. So yeah, clearly that would be another factor of limiting the increase in prices, along again with the high inventories and limited demand nowadays.
Anna, of course, the pandemic really highlighted the vulnerability and the fragility of some of these global supply chains. There was a lot of focus then in terms of the resilience or building out, investing to try and support and make those more resilient. Is any of that proving coming to the fore? Are we seeing the fruits of that labor, or is it too early to say?
Well, there are trends that are now much more visible, and clearly one of them is the diversification out of China. And we clearly see ASEAN countries as being one of the main winners of this diversification strategy, and nearshoring in some cases, friendshoring in other cases. So clearly, it's not only about supply chains, but it's also about geopolitical moves. And we know that this year we will have the US elections that could play a role in how trade would cope and how maybe global tariffs will go going further. So clearly, companies are anticipating on potential further disruptions in the medium term. Okay. And clearly, India, Vietnam, Philippines are countries that are benefiting today from this diversification of supply chains.
Okay. Really, really smart analysis. Anna Boata, Head of Economic Research at Allianz Global Trade. Thank you very much indeed. Coming up, the World Economic Forum kicking off, of course, in Davos today. We're going to take a look at the main issues set to dominate discussions. That is next. This is Bloomberg.
Did art conservation help you in any way to be a better investor? And should a lot of good investors learn how to be an art conservator as well, or not?
I think in conservation and art history and liberal arts, I think differently than a lot of people that have just done finance. And also, I think I mentioned one of the things is to do conservation, you have to really do a lot of work, pre-work, before you actually do a treatment. And so a lot of that pre-work is very similar to what I do in due diligence for investments. Lots of testing, lots of thinking about what could go wrong, lots of research. When I was an art historian, that was in the old days before the internet, but you'd sit in the stacks and you'd pull one thing in a bibliography on this and you'd sort of, like a mosaic theory, put all these things together. I feel like I do that in my due diligence.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Watch Bloomberg ETF IQ.
Now, as economic, financial and business leaders gather in Switzerland for this week's World Economic Forum, here's a look at the main issues set to dominate discussions.
White alpine mountains, billionaires, and the global elite. It can only be Davos, the tiny ski resort in Switzerland, home to the annual meeting of the World Economic Forum. Here are three key topics high on the agenda. Number one, a dovish pivot. Despite all the talk of higher for longer, sticky inflation, and robust labor markets, investors are now pricing in aggressive rate cuts by key central banks this year. Following the cost of living crisis and the unprecedented cycle of global monetary tightening, reduced borrowing costs cannot come soon enough for debt-strapped companies and governments. And the next crucial question is whether policymakers can make the pivot to avoid a hard economic landing. 2. Rising geopolitical pressure. World leaders were already grappling with the Russian invasion of Ukraine, launched by Putin's forces nearly 2 years ago. The much-anticipated counteroffensive by Kyiv hasn't quite gone to plan, and foreign support and military aid is not flowing as freely. There's now also a second conflict on the global stage between Israel and Hamas. The humanitarian cost has been immense, and the war has the potential to spark wider tensions across the Middle East with ramifications for global trade. And 3, just 2 letters, AI. Investors are obsessed with its potential to disrupt chunks of the economy, and it drove some of the biggest stock market gains last year. Pressure is now mounting on tech companies to deliver on some of the earnings hope. And in the hallways of power, security, and ethical concerns remain. The EU struck a landmark agreement to regulate artificial intelligence, and it could set the tone for similar rules by governments across the globe. Of course, Davos draws a lot of criticism as being exclusive and out of touch with reality. But key politicians and industry titans continue to go in droves. And as long as they do, the buzz will remain, along with the potential for meaningful change.
Back to one of the biggest movers of the day, and it is Software One, listed in Switzerland, rebuffing a non-binding offer by Bain that would have valued the company at about $3.5 billion US. The stock currently down close to 11%. We keep across that story for you. Stay with us. This is Bloomberg.
what do you consider to be the biggest challenge?
Infrastructure that supports trade is the biggest challenge. Our senior brother, President Adesina of the AFDB, estimates the annual deficit, infrastructure deficit in Africa to be over $100 billion. But that over $100 billion is actually also an opportunity for investment. So it is a massive, a significant challenge that we are confronting. And my fear is that we may succeed in establishing a very effective legal construct and a very effective legal foundation for trade liberalization and investment liberalization in Africa. But all of that will come to naught if the infrastructure deficit is not addressed, because you will need the goods to move somehow, and you will need to have good trade corridor connectivity, ports, trade corridors that connect countries that are landlocked to the ports.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. That's a question I get all night.
Bloomberg, top experts, great questions.
This is Markets Today. We are 30 minutes into the European trading day. Here are your top stories. China surprising by keeping a key lending rate on hold. European stocks gain as a drop in US producer prices fuels Fed's cut bets. And Taiwan's ruling DPP wins the country's tightest presidential elections in decades, but loses its majority in parliament. We are live on the ground for you in Taipei this hour. Plus, the World Economic Forum kicking off in Davos. We have, of course, a slew of exclusive interviews with some of the world's biggest power brokers. Checking in on your European markets. US, of course, closed for Martin Luther King Day. Across the European benchmark, you're seeing very modest gains of just 0.1%. A survey by Bloomberg of economists pointing to expectations that we could get forecasts from the ECB bringing the rates down to 3%, but not starting until June. Across your sectors, the picture then is mixed, of course, with travel and leisure near the top of the list, gaining a little over 1%. Gains also coming through for real estate, insurance doing relatively well, gaining 0.5%. At the bottom of the list, you've got banks down as a sector, currently 0.2%. We look ahead, of course, to the bank earnings picture out of the US being filled out Tuesday with Goldman Sachs and Morgan Stanley after, frankly, a bit of disappointment coming through from the likes of JP Morgan and others as we weigh up, of course, the demand for those investment banking services and maybe a little bit of a moderation when it comes to net interest margins. That's the picture then, sector by sector. Energy remains in focus for us today as a sector, just gaining 0.1%. Oil prices have actually come off a little bit in the session, $78 a barrel on Brent. But of course, we have had our own reporting that Qatar is rerouting some shipments of LNG. So we keep across, of course, the military frictions as well around the Red Sea as the US continues to confront the Houthi rebels. Across your sectors as well, financial services posting gains, pretty decent gains of around 0.3%. Banks, though, on the downside, 0.3%. Autos also taking a modest hit, currently off 0.2%. And as we mentioned on the macro front, China taking the decision to hold rates, one of the key rates at least, coming as something of a surprise for some of the markets as they now focus on the potential of a triple R cut or a cut to reserve ratio requirements for Chinese lenders, possibly in the next few days or weeks. To the politics now, of course, a major year, a huge year, not just for US politics, but politics, of course, as well in the UK. And you're seeing some events unfolding on the ground in Berlin and, of course, over the weekend in Taipei. But let's start with the US, where the race for the White House shifts into a higher gear later today. That's as Iowa kicks off the Republican presidential nomination races. Donald Trump heads into the caucuses with polls showing a commanding lead over rivals Nikki Haley and Ron DeSantis. Joining me is Bloomberg anchor Kriti Gupta, who's got a finger firmly on the pulse of US politics. Kriti, tell us about the caucuses. What is the latest? What are we expecting?
Well, we're expecting President Donald Trump to lead, as he has been for quite a while, but lead by a massive margin, a potentially historic margin. 48% is where he's last been polled at, a 28-point difference than his second-place competitor, so Nikki Haley, which I would say is on his heels, but not really, which I think is the entire point. And I think that's where we're at. It really speaks to the fact that voters are expected to come out in full force for Donald Trump, despite the massive ad spend that both Nikki Haley and Ron DeSantis have been throwing into this campaign.
And those kind of gaps you don't see very often, do you? It's relatively historic in terms of the size of the lead coming through from Trump. When it comes to the political machinations in Washington around spending, where are we? Are we avoiding a fiscal cliff, a spending cliff in Washington?
Well, it's funny because we're talking about the Iowa caucus at the same time that Mike Johnson, the Speaker of the House, I want to say the latest Speaker of the House from the GOP, is trying to kind of salvage a funding bill as well. But they're actually interrelated issues. The GOP lately has really been branding themselves as the party of austerity, the party that's going to get the U.S. finances back on track. And that's such a key part of what Mike Johnson is trying to do over in Congress right now, creating the stopgap funding bill, a bipartisan one right at it, that's going to add a little bit more funding to energy, transportation, defense, but only for the next 6 weeks while they kind of figure out some sort of alternative solution, but trying to fight off some of the more right-leaning members of his party that are trying to tie some of that funding to more GOP-oriented issues like immigration, like gun control, like abortion. It's a similar kind of story in Iowa as well, because if you look at the way that these three candidates are campaigning, Nikki Haley has really come out on top saying that fiscal spending needs to be reined in. And Ron DeSantis and President Trump have both said similar things, but they are all targeting a lot of the things that the Democrats have spent during the post-COVID era. Think of the Inflation Reduction Act, think of CHIPS, think of EV spending, climate change, for example. That is all the funding that the GOP candidates and even Mike Johnson is trying to roll back to really save the U.S. as they're trying to frame it.
Okay, so the spending slugfest in Washington being linked to the events on the ground unfolding in Iowa. Kriti Gupta with the analysis and the latest, of course, when it comes to U.S. politics. Thank you very much indeed. Let's switch focus, though, to Taiwan, where Lai Ching-te of the ruling DPP sealing a victory in Saturday's pivotal elections. Lai, who has been branded a, quote, instigator of war by Beijing, pledged to keep the peace with China.
We are telling the international community that between democracy and authoritarianism, we will stand on the side of democracy.
Let's cross over now to our chief North Asia correspondent, Stephen Engel, live from Taipei, who has been on the ground for us charting this historic election. How has China then, Steve, reacted to this result?
Well, fairly muted so far. Obviously, this is not the result that Beijing wanted. They have branded, as you rightfully said, Lai Ching-te as a separatist, as an instigator of war, and they have been using that kind of rhetoric, obviously, for the last 8 years, because the DPP has been in power for the last 2 terms under Tsai Ing-wen. Because of term limits, she will be stepping down, and her vice president, as of May 20th, William Lai Ching-te, will take over as president. So it's kind of a continuation candidate and presidency, and that obviously does not sit well with Beijing. If you want to call a victory, though, for Beijing, that was the small Pacific island of Nauru, the country of just 10,000 people, but significant today, announcing that it's going to switch its diplomatic recognition from Taiwan to the People's Republic of China, Beijing. That, on the surface of things doesn't sound like a big note, but again, Taiwan now only has 12 diplomatic relations with other countries. It's dwindling. In fact, under Tsai Ing-wen, the president for the last 8 years, she lost 5, or Taiwan lost, I don't want to blame it all on her, but lost 5 Latin American countries alone, including El Salvador, Ecuador, Nicaragua, Honduras, Panama, all switched their diplomatic ties from Taiwan to Beijing over the last 8 years. So now is another one, a small Pacific island. So you could call that a victory for Beijing. Granted, they have a much bigger, thicker checkbook than Taiwan does. Some would call it checkbook diplomacy, but it's a victory nonetheless for Beijing that tries to isolate Taiwan diplomatically.
Yeah, the symbolism, of course, important, as you say, and the timing interesting as well. Taiwan, obviously, a major hub of semiconductors, chip making. Steve, what is the outlook then? How is business reacting to this? How is industry reacting to this? What are the kind of wider potential business implications of this DPP victory?
Well, I think for the most part, this victory by Lai Ching-te was expected. The polls had indicated leading up to the election that the DPP would likely win, especially since it was a three-horse race and the opposition was divided. The KMT and the TPP kind of cannibalized each other in this election, even though those two candidates combined, Hou You-yi and Ke Wen-je, got more votes than the winning Lai Ching-te. But businesses have been putting in their mitigation practices and policies for quite some time over the last 8 years as relations across the Taiwan Strait have deteriorated. U.S.-China relations have deteriorated. They might be stabilized now, but again, Taiwan has been at the heart of some of the difficulties there. And the chip makers like Taiwan Semiconductor already doing their risk mitigation. They're building a plant in Arizona, $40 billion. They are building a plant in Kumamoto, southern Japan. They are doing that kind of risk mitigation in case the tension across the strait does indeed increase. No one is necessarily predicting it will increase, but nobody is saying it's going to decrease. So we'll have to see further steps that Beijing might take to further isolate them, Taiwan diplomatically, and also perhaps some military exercises to show its displeasure to the, how many million? 5.59 million voters here who did vote for the DPP.
Okay, excellent stuff. Thank you very much indeed. On the ground for us, Bloomberg's chief North Asia correspondent, Steve Engel. Thank you. To Germany now, where farmers are entering the second week of protests against diesel subsidy cuts. The nationwide disruption is piling misery on Chancellor Olaf Scholz's coalition as it struggles to fix a budget mess. For more on this, we are joined by German correspondent Oliver Crook, who is on the ground at the protests in Berlin. Ollie, why so much anger then against the German government?
Tom, has gone really out of the abstract here. At the end of the year, we were talking about this budget crisis in sort of theoretical terms, 17 billion euros missing here and there. How are they going to plug that hole? They decided to plug it in part by doing away with certain tax preferences to the agricultural sector, and the consequence of that has been 8 days now of strikes across Germany of the farmers. They have all descended today onto Berlin. Many of them have driven up to 5 hours. I was talking to some of the farmers this morning to bring and basically park their tractors on the front lawn of Olaf Scholz. So the entire city is basically paralyzed. You can hear the sounds of honks, air raid sirens, and just trying to make a lot of noise and describing their discontent. And this is obviously at bottom also an economic story here. There's not enough money to go around, and some tough decisions need to be made. And really, honestly, it would be difficult for any government, but Olaf Scholz is bearing the brunt. A prime minister, or I should say a chancellor, who is at the lowest approval rating since 1997, the lowest since those sort of records were begun. And this is really, coming to the fore here at the center of Berlin today.
Ollie, how was all of this then, the disruption that we are seeing on the ground in Berlin, these protests, the concerns about the budget, how is it all playing in to those elections, state elections coming up in September?
Tom, so we should say that we don't have the federal election until next year, but we have 3 state elections that are coming up here in September, all in the sort of or surrounding eastern part of Germany around Berlin. And right now, again, it's interesting because it's hard to coalesce all of these protests into who they're actually supporting politically. It appears to be really more a protest against this government and against some of the political options they have. But what the AfD, for example, the far right in Germany has done is try to capitalize on that discontent. And as a consequence of that, you have them right now polling as the #2 party here in Germany. And in all of those 3 state elections that I just mentioned, they are expected to sweep, to win by a fairly large margin. And that would be very, notable in the fact that that has never happened before on this sort of scale in Germany. So again, this is a moment in time when the coalition, the entirety of it, is just plummeting in the polls. The CDU is still polling at #1. But again, you're going to see this translate into political discord. And in those GDP figures that are about to drop in a few minutes, you're going to see a contraction probably in last year. That is only going to make things worse and more tense.
Yep, expectations are you'll get a contraction of around 0.3% for last year. Bloomberg's Ollie Crook on the ground at a pretty raucous Berlin right now, dodging the tractors for us. Ollie, thank you very much indeed. Coming up after a Boeing 737 MAX 9 narrowly escaped catastrophe, how will the US company Boeing regain trust that it can still build reliable aircraft? We have more on that story next. This is Bloomberg.
This will probably go down in history as one of, if not the largest financial crimes ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some point that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
So, Mark.
Are you in? I'm in.
I'm in.
We're in.
Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
Happy Monday. This is Markets Today, 45 minutes into the European trading day. The European Stock 600 benchmark has actually dipped into negative territory now, down 0.1%, having started the session in positive territory. Here in the UK, the FTSE 100 is down 0.1%. Over in France, the CAC 40 is off by 22 points, down 0.3% at 7,442. Let's get back to the story and the saga around Boeing now, because Alaska Airlines will initiate and enhance, I'm quoting, its own quality control checks on the production of its planes. It comes in addition to the Federal Aviation Administration's review and oversight of the process after an accident, of course, on a Boeing 737 MAX 9 this month. So, how can the plane maker rebuild trust in their aircraft and in their brand? That is the subject of today's Big Take. Let's get the details then with Bloomberg's Sid Phillip, who has been following all of this at a granular level for us. Sid, what is the latest then?
So for Boeing at the moment, they really need to sort of rebuild trust because of the fact that, I mean, they're under tremendous regulatory scrutiny. I mean, the FAA, as you mentioned, is looking into Boeing's production system. They also sort of said that the ungrounding of the MAX 9 will take, they will do an extensive review before they unground it. So at the moment for Boeing, it is really a very difficult situation. And remember, the airlines really need to get these planes back in the air because, I mean, there's record backlogs that stretch into the end of the 2030s, and that's essentially where the planes need to come
So
from.
what are the experts that you speak to saying about the fixes that Boeing should be putting in place?
So a lot of the experts we speak to say that Boeing really needs to take a step back and focus really on quality and sort of trying to get their their production lines up to scratch before they can sort of run. So essentially walk before they can run, make sure that their processes are up to snuff, and essentially step back in this sort of race with Airbus in terms of raising production and really focus on building planes that are really good.
And explain for us why this is not just a problem for Boeing. This is a problem for the wider aviation sector that you cover day in and day out.
Absolutely. So for the aviation sector, this is a massive issue because there is a duopoly, and essentially it's Boeing and Airbus, and there are few competitors out there. So for Boeing, they really need to get their planes together because, again, because the airframe makers have backlogs that stretch out until the end of the decade, they really have to sort of build those planes because the airlines are depending on those planes coming in for their growth as well as replacement. So you have older planes that need to be retired, and those planes can't be retired until they get the new planes in. So for the aviation industry, Boeing is crucial, and sort of they need to get their production up to snuff before they can sort of look at anything in terms of growth and sort of building out their market share.
Okay, really important deep dive again on the consequences of the challenges facing Boeing and the wider aviation sector as a result. Bloomberg's Sid Phillip with the analysis there. That is the subject of today's big take, so do check it out on the Bloomberg terminal or, of course, on Bloomberg.com. Here's some of the other top stories to focus in on this morning then. Major US lenders wrote off more of their commercial property loans as remote work and higher interest rates pummel valuations when it comes to office space. According to the recent earnings releases, net charge-offs at Bank of America and Wells Fargo rose during the fourth quarter, partly due to office loans. BlackRock has agreed to buy Global Infrastructure Partners, GIP, for about $12.5 billion. The move vaults the world's biggest money manager into the top ranks of investors that make long-term bets on energy, transportation, and digital infrastructure. BlackRock will pay $3 billion of cash and about $12 million in shares. The deal is expected to close in the third quarter. And Apple is offering discounts of as much as 500 yuan, or about $70, on its latest iPhones in China for the first time in years. The rare move may deepen fears about demand for Apple's products in the world's second largest economy. Apple quietly introduced the savings on its Chinese website today, with deals running ahead of the Lunar New Year shopping season. Coming up, China's central bank holding its MLF rate steady, one of the key interest rates at its disposal, defying expectations of a cut. We look at the implications for the Chinese economy with Ven Ram from our MLive team next. The analysis coming up. This is Bloomberg.
Is crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
Good morning. This is Bloomberg Surveillance on TV and radio.
Welcome to Bloomberg Markets, China Open.
Good morning, everyone, and welcome to the Pulse.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
Welcome back. Happy Monday. Let's check in on some of the key market themes then. We've been talking about what's happening in China or what's not happening in China. The PBOC, the Central Bank of China, keeping one of its key policy rates on hold, coming as a surprise to many who'd expected maybe a bit of easing given the economic pressures coming through for that economy. Let's bring in Ven Ram then from our MLive team for the take on this. Ven, is this a question of a central bank in China that can't move until it gets more clarity from the Fed, or is this something else?
I think this is something else, Tom, because I think that the putative intention of the move was to support the yuan, and I think that that's kind of misplaced because, you know, domestic demand is in a funk. I mean, the property market is deep in the doldrums, as you know. There's too much of supply, and we have all heard of stories of ghost towns. Youth unemployment is soaring in China, plus 21% plus. So there is domestic demand is pretty weak, and there's only so much that the PBOC is going to get by reflating domestic demand. Instead, what they should be looking to do is perhaps to reflate global demand. And you know, experts have been sputtering for the past 1.5 years ever since China reopened its economy. So what they need to do is let the yuan, allow the yuan to weaken more, and get that global demand back, capture the global demand for Chinese goods. And I think they're bound to have more success that way. And China therefore needs a weaker currency rather than a stronger currency at this point to get out of the morass that they are in.
Okay, 7.17 currently on yuan, US dollar, and we switch focus to the yen, from the yuan to the yen, Ven, because you have views on the yen, currently trading at 145 in the session, down 0.4%. It was a currency that, of course, grabbed our attention towards the end of last year, but you say the yen's going to be treading water, at least for the time being.
Absolutely, Tom, because, you know, the negative carry bleed on holding a long end position is pretty punitive at this point, because if you look at the 3-month deposit rate in the US, it's obviously around 550 thereabouts, in line with the Fed funds rate. If you look at the comparable rate in China, in Japan, I beg your pardon, is around minus 0.2% because of the JGB yields. And therefore, the negative carry, I mean, the losses that you underwrite in your own portfolio by holding the long yen is pretty considerable. Just so far in the first few days of January alone, if you had held a long yen position, you would have had losses of 3.2% to show for it. So it's not a very good, very smart idea to hold the yen, to be long the yen just yet. Maybe towards the spring when the BOJ might do something about the rates, about its policy rates.
Okay, Ven Ram from our Markets Live team on the prospects for the yen, and of course the analysis around that PBOC decision to keep rates, at least one of its key rates, on hold this morning. Remember, you can get up-to-date analysis from Ven and the rest of the team, and insight, of course. Go to MLIV Go on your terminal. Now, the World Economic Forum gets underway today. We're going to be bringing you, of course, a stellar lineup of conversations from Davos this week, including OpenAI CEO Sam Altman, the IMF's managing director, the CEO of the Qatar Sovereign Wealth Fund, and the ECB's Christine Lagarde and BlackRock's CEO. We kick things off shortly with an action-packed hour, including the Vice Chair of BlackRock. Stay with us. All of that is coming up and plenty more. This is Bloomberg.
was around so many powerful people in my entire life. From the time I got married to Robert Kardashian and had a whole ecosystem of businessmen and entrepreneurs and people running studios. And, you know, any given day it would be the head of a studio and, you know, just often paid attention without really realizing I was paying attention. And I had a very amazing education. I was a housewife. I was raising 4 kids at home. I had the most blessed situation, but at the same time surrounded by these business situations that I didn't even realize were happening right in front of me, but I must have been absorbing it because there's so many times I've like brought up in my mind one of those conversations that I had learned from. And so I think I had a very lucky and blessed existence that way.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
From New York City,
From London, in Sydney,
from Washington,
in Tokyo.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching. You do not want to miss this story.
He's there to kind of upside.
This is Bloomberg.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here live from Davos. Join us all week for our exclusive interviews with some of the world's biggest power brokers. So here's what's coming up on today's program, Day 1. The World Economic Forum kicks off here in Davos. Global leaders from the worlds of business and politics gather to grapple with some of the globe's biggest challenges: conflict, climate, and the impact of artificial intelligence. President Zelensky is said to be planning to meet with JP Morgan Chief Executive Jamie Dimon here in Davos as Ukraine seeks aid to rebuild, with calls for help being eclipsed by the Middle East conflict. And in the U.S., lawmakers unveil a stopgap spending bill aimed at averting a partial government shutdown later this month. Meanwhile, the first official contest of the 2024 election takes place tonight. We'll discuss that with some of our big guests here from Davos. Also coming up, we'll be joined by the former U.S. Vice President Al Gore, Coinbase CFO Alicia Haas, and the Chief Executive and founder of the WOW Foundation, Jude Kelly. But in a moment, we'll be speaking to the BlackRock Vice Chair, Philip Hildebrand. Now, we're also just getting some breaking news out of German GDP. Now, this is an incredibly important number, not only for the ECB, but because of the concerns that we've had over the German economy over the last couple of months, it gives us a good indication of what we could expect for the whole of the Eurozone. Now, German economy contracting some 0.3% in 2023. That's pretty much as expected. Again, if we actually do the breakdown, we'll be able to see exactly what's done better than expected and what's done worse. Now, farmers, of course, entering the second week of protests also in Germany against diesel subsidy cuts. The nationwide disruption is piling misery on the Chancellor Olaf Scholz coalition as it struggles to fix this budget mess. So let's go straight to Bloomberg's Oliver Crook, who's in Berlin. So, Ollie, break down the GDP numbers for us.
Yeah, that's right, Francie. And this is really the culmination of those protests we've been seeing for about 8 days now. And today is the day when all of the farmers from across Germany have descended upon Berlin in order to put themselves right in front of the Bundestag, right in front of Chancellor Scholz, to express their displeasure about some of the actions that had to be taken about the budget cuts. And this is really a story that went from the sort of abstract last year when we were talking about plugging that budget hole into the reality of what that means and what it means for certain industries. By the same token with the economy, right? We're talking about a contraction of 0.3%, the only major economy like Germany to have contracted last year. The question is, what does it look like going forward? I mean, we've had 6 months in Germany of industrial contraction. And again, going from the theoretical, the abstract, we've talked about the energy crisis. We've talked about the labor shortage. We've talked about all of these stories in Germany. This is really where the rubber hits the road, and we start to see the economy weakening. And what is in hold for this year? We're expecting a slight growth this year, but if you ask Deutsche Bank and Commerzbank, it's going to be more contraction, and that is going to continuously pile up more pressure on this government, where there is the lowest approval rating for a chancellor since 1997 in Olaf Scholz when the records began. So really a very tense moment for Germany, and the political consequences will be vast.
All right, Ollie, thank you so much. Oliver Crook there in Berlin. Now, last week, BlackRock became one of the world's biggest infrastructure investors after it also announced an agreement to buy global infrastructure partners for about $12.5 billion. I'm very pleased to be joined by BlackRock's Vice Chair, Philip Hildebrand. Philip, thank you so much for joining us. There's so much going on in the space of central banks. It's pretty incredible, actually, that the world has been so resilient despite the huge monetary adjustment, unwinding 15 years of, monetary loosening. Are you optimistic about 2024?
Well, I think that you're right. The past has been really, the last year has been a story of pandemic savings that have been run down by consumers, so very strong consumption. And then we should not forget government spending has increased dramatically, particularly in the U.S. And so you've seen these two forces that have kind of been a countervailing force to the contraction that we've seen in capital markets through tighter interest rates. Probably most people have been surprised. The question now is, how much longer can this go? How much longer can we have government spending the way we've seen it? How much longer can you run down these pandemic savings? And that's going to be the story, I think, of this year. In a sense, it's the final normalization of the post-pandemic adjustment.
So what does that mean you're watching out for this year? Again, we started last year thinking that we could see a huge recession in the U.S. We were worried about corporate default, and we haven't seen any of that.
That's right. I think the story in the next few months is going to be goods inflation is going to continue to drop quite rapidly. We have now negative numbers, and that basically brings down the overall inflation numbers quite dramatically, and as a result the markets have now priced in what I think is probably excessive interest rate cuts in the U.S. But that's going to run out at some point. This is the final leg of the post-pandemic adjustment. So by year end, I would say we're going to be done with that, and then goods inflation is no longer going to drop. Service inflation, wage inflation is still very high. And so I think the story is going to be, at some point we're going to realize that it's not that easy to kind of stabilize the 2% inflation target that central banks are looking for. And so some of the optimism in rates right now in the U.S. in particular is probably overdone.
But so what worst case scenario, we don't have as many cuts as are being priced in, and also that would be during a slowing down of the economy, or are you seeing the jobs market to be pretty much resilient?
I think the wages, services looks resilient at the moment. Goods inflation is going to continue to come down. There is going to be weakness in the economy. There's no question about that. But I think what central banks will find, particularly in the U.S., that they won't have as much room to cut as is currently priced in. I mean, we're sort of priced for perfection right now, and there's going to be some readjustment to that. Less so in Europe. I think in Europe the story is in a sense clearer than it is in the U.S.
Philip, infrastructure, so what's the thinking behind that?
Well, look, first of all, I think Larry always says culture matters most. So this brings together, I think, two firms, two partners, two leaders that have known each other for 4 decades and a cultural fit. Infrastructure, we believe, is a big story in private markets in the next 10, 20 years. These are long-term trends. We know that we need to upgrade infrastructure across the world. It also is a perfect fit. We have very little overlap in our existing infrastructure business and the GIP business. And then finally, I think the transition as one of the infrastructure stories is also an interesting piece here where, again, there is a lot of synergy between what we have done and what GIP has done in the past. And it brings us to scale at infrastructure. We're now going to be one of the big infrastructure players worldwide, so it's very, very exciting.
So where do you see the most opportunities, I guess, for business or business deals? Is it going to be where there's growth, and is that the U.S. market compared, for example, to the Asian market, or do you also see potential opportunities in Europe?
I think the global infrastructure story, and it really is a global story for many reasons, right? We have outdated infrastructure think of the UK, think of the US, massive need for infrastructure spending. We have the entire transition story, the energy transition story. You'll hear more about that later on today, I'm sure. That's going to require trillions of investments, and we have stretched governments. I think this is one of the key stories that also underpins this transaction that Larry and Bio announced last week, that you have very much stretched government. So public-private partnerships, particularly in these vast infrastructure projects, are going to be a very big story. And this is something where we want to be part of it. And so I think that's a great opportunity, both in Europe and in the U.S. as well as in Asia, frankly.
But so away from infrastructure, maybe a little bit, is there something that you worry that's not being priced in correctly in the markets?
Well, at the moment, I think, if anything, I'm a little worried that we're sort of priced for near perfection, a sort of almost perfect soft landing, where inflation, is gone as a problem, where maybe central banks could even cut in the face of any kind of potential weakness. I'm certain that what we're going to find is that this inflation has become stickier than we think, or than the market thinks right now, for various reasons. We have lower growth, we have very high government spending, we have a fractured, geopolitical system. So all this basically raises cost, and what we're going to find as inflation drops now, mostly driven by goods prices, by the end of the year we're going to realize that it doesn't settle easily at 2%, let alone at something less so that you cut rates. But I think, more likely we're going to settle probably slightly above 2%, which means central banks are going to have to stay on alert.
So do you worry about the cost of money, actually the cost of credits? And this could be because of what we've seen in the last 18 months, but actually it could be also much more structural reasons.
Yeah, I mean, look, I think one of the stories of the last decade really is a lot of investments have been done by way of financial engineering. And in some ways, we're going to have to get back. This is another reason why we prefer infrastructure over private equity. We're going to have to get back to kind of long-term macro trends, and realize that financial engineering, when interest rates are higher than they have been for decades, when growth is lower, when government spending is going to be constrained, financial engineering-driven investments are going to be much, much harder to find. And so I think in some ways it's a healthy correction towards, in a sense, kind of returning to investing really on fundamentals, as opposed to a lot of leveraged debt and financial engineering.
Thank you so much. The BlackRock Vice Chair, Philip Hildebrand, stays with us. We'll talk a little bit more also about geopolitics and, of course, how markets should look at that. More from Davos, day one. This is Bloomberg.
CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper. One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. A new episode every month, only on Bloomberg.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
Welcome back, everyone, to the World Economic Forum here in Davos, where the BlackRock Vice Chairman, Philip Hildebrand, is still with me. Philip, thank you for sticking around. I mean, we're kind of freezing you here, so I don't know where else you go.
It's great to be here. Look at this backdrop,
but it
right?
is a good view. We freeze you, but give you a good view.
As a Swiss, this is what you want to see.
I know, it feels like an advertisement for Switzerland. When you look at some of the concern across the globe, how difficult actually could it be for Switzerland, kind of, getting out of all the bank debacle, but also attracting global investment?
I think we have a current account surplus, so there's no issue of capital coming in. In a sense, the banking story is an adjustment. It's a tragedy, should have never happened, but it is what it is. And I think the key now, the focus in politics will be how do you make sure that you have a bank that is this large relative to the country's economic and financial capability. How do you manage it from a risk management perspective in a sense that you don't ever have to get back to a kind of situation that we had with Credit Suisse. So that will be the focal point, I think, of any regulatory reform.
So when you talk about risks, I mean, it's pretty incredible to think, of what's happening in the Middle East and the fact that the market has barely taken notice. Maybe there's a bit of move on the oil price, but there's attacks, there are drones, there's Houthis, there's Yemen, there's Ukraine. We also don't know who becomes the next president of the United States. Like, how do you deal with all of these unknowns?
It's hard. I think the overall story is that we've moved towards a much more fragmented geopolitical system, therefore a much more fragmented global economy that is organized in a sense in blocks. That means a loss of efficiency, that means higher cost, and probably means on balance a lower potential growth rate for the global economy. Now, the focus has to be on maintaining the conflicts and where possible to try to solve them or stabilize them. In a sense, the good news is that a lot of these things are man-made. Demographics, there's not much we can do about it. That lowers potential growth. Fragmentation, in a sense, we can address. We could find a way to stabilize the situation in the Middle East. We could find a way to ultimately move towards some sort of ceasefire discussion in Ukraine. And we can, we could stabilize relations between the U.S. and China. So a lot of this, in a sense, has been man-made in recent years. It's a problem. It weighs on markets. It weighs on the global economy. And hopefully discussions like this can be a contribution towards lessening these tensions and moving back towards something that is a little less fragmented than what we currently have.
Is that likely?
Well, it's, that's, I suppose at some level, the simple answer would be not really when you look at the current state of play. On the other hand, the cost of this fragmented system over time, I think, is going to drive political leaders and political system towards trying to address those things that we can address. Some things we can't. Demographics, there's not much we can do about it. We can hope that perhaps productivity can be boosted, whether it's through AI or other means to make up for some of it, but there's not much we can do about it. On the fragmented state of the global economy, in principle, these are things that can be addressed through good policy making.
What does a second-term President Trump mean for the world economy?
Well, this is Christine Lagarde talked about it the other day. I think you're going to see her later on today. Certainly from a European perspective, from a kind of globalist, Atlanticist perspective, it's, of course, a great concern. We've been there before. We survived it, so we'll see what it means. I think the question overall will be, does it lead to even more fragmentation in the global economy? And, if that's the case, the cost of that will become quite apparent.
Who are you most worried about? I mean, is it the U.S. economy because of a division, or is it how Europe would deal with President Trump?
I think that the overall the big story in Europe is how does Europe find a sort of a, President Macron has referred to this as European sovereignty. How do we find our own place in this system with less dependency on the U.S., less dependency on China in the space of digitalization, in the space of finance, frankly, and in the space of security. And security, of course, is the one place where the dependency, in a sense, is most pronounced. So I think Europe has if it wants to be an independent power in a sense. It has decades of very hard work ahead of itself to find this sovereign space in a sense in this fragmented world.
Philip, thank you so much for joining us today. Philip Hildebrand, the Vice Chair at BlackRock, really getting us started for the week here in Davos. Now, coming up, we'll be talking to a pioneer of gender equality, Jude Kelly. She's the founder of the WOW Foundation, a charity dedicated to confronting gender inequality around the world. That's a key conversation next. And this is Bloomberg. And then a little bit later, we'll also be speaking to the former U.S. Vice President Al Gore, getting his reaction to the news that John Kerry is stepping down as America's top climate envoy. Stay with us.
Did art conservation help you in any way to be a better investor? And should a lot of good investors learn how to be an art conservator as well, or not?
I think in conservation and art history and liberal arts, I think differently than a lot of people that have just done finance. And also, I think I mentioned one of the things is to do conservation, you have to really do a lot of work, pre-work, before you actually do a treatment. And so a lot of that pre-work is very similar to what I do in due diligence for investments. Lots of testing, lots of thinking about what could go wrong, lots of research. When I was an art historian, that was in the old days before the internet, but you'd sit in the stacks and you'd pull one thing in a bibliography on this and you'd pour it like a mosaic theory, put all these things together. I feel like I do that in my due diligence.
To the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg. Context changes everything.
The fight for gender equality in business and finance is continuing in its goal for change. Female chief executives remain a small minority, while differences in pay and career progressions are still being called into question. Well, one of the voices leading the gender equality movement in business is Jude Kelly, Chief Executive Officer and founder of the WOW Foundation, and she joins me now. Jude, thank you so much for joining us. There's so much going on, and we're not making real progress. If you look at the number of women and the gender pay gap in full-time positions, it's actually gotten worse in 2023. Why?
Well, I think COVID had a lot to do with it. I think that also people shift focus. So, the hot ticket at the moment is climate change, which of course it should be. But I think that the whole realization is that unless you are going to bring women's potential full on, full force to everything that the magnitude of humanities has to deal with, then we're really missing a trick. And I think it's going backwards as well because, the issue about paternity involvement, childcare, it hasn't really shifted either. The issue around violence against women hasn't really shifted. So, I personally, my reason for being in Davos and the talk I'm going to give is about fathers and daughters and men's involvement. You can't wait for women to do all the fighting to catch up. And, when you're talking about gender equality in terms of pay, it's not just female financial worth, it's also the jeopardy you put women in when they're largely responsible for family if you don't give them equality of opportunity and pay.
We're also seeing MPs in the UK looking at sexism in the city, in the financial district.
Yeah.
Like, why are we still talking about this in 2024?
I was going to say, this sort of was old news that went with pinstripes and red braces, didn't it? But obviously, sadly not. And it's a terrible thing to see the attrition of brilliant women who are just bailing out and saying it's not a place that I want to work in because it doesn't speak of the values that it pretends to have. It's really serious. It's got to be attended to. And I think, the Me Too movement sort of came, people kind of went, well, it's a bit too much, isn't it, girls? And then a lot of hostility. Look, this is not about not loving men. We all love men. Actually, this is about behavior being endemic and having to be changed. And, the city cannot carry on like this.
Where are we making progress? Again, if you speak to a lot of top chief executives, they say it doesn't really, I want the best females because it's 50% of the population, and otherwise my pool of talent gets reduced.
Yeah, but the thing is that there are brilliant chief executives, of course, and there are brilliant people running HR departments, mainly women, D&I, but it's actually what you're really saying in between all of those spaces. What are you saying to people? Just cut through, we want the bottom line dealt with, I don't care how you get there. And at the same time, you sort of have this idea that kind of macho ranging around is the attitude you want to keep. We can't even at work even begin to talk really about the number of stresses and jobs that women do separate from their actual job. So, long conversation, I'm still optimistic.
But it is changing at the margins, is it? Like the fact that leadership now is more about nurturing, is more about bringing your talent and your team with you.
Yeah, I do think so. I think that the nature of leadership has been called into question. We're no longer command and control. That's kind of out of the window to a large extent, certainly in certain economies. But I think that it's a long way before a lot of men have the experience of, if you like, the number of things that women deal with. And because you don't want to be a moaner, a lot of women actually keep stum, because they feel if they keep calling it out, even on behalf of other people, that somehow I'm going to be seen as a troublemaker. So this silencing around the microaggressions, not even the big problems, that's still a problem too. So, it's women have to be braver, although it costs them sometimes. But the biggest issue is that men have got to be better allies. And why wouldn't they be? Why wouldn't they be? After all, their brothers and their sons and their dads and their uncles. And, I like men, like climate change. Don't leave it to the climate activists to sort it all out. We're all involved. Don't leave it to women to sort out equal pay and sexism generally. We're all involved.
Jude, thank you so much. And the speech that you're giving on fathers and daughters will be extremely powerful. Your first Davos, actually.
It is my first
So you'll have to come back to tell us what you think. Jude Kelly, the chief executive and founder there of the WOW Foundation. Now, coming up, we'll be joined by the former U.S. Vice President, Al Gore. We'll have a conversation, of course, on climate change, but we'll also have a conversation on the U.S., where it's going politically, and maybe we'll touch on his biggest fears. Stay with us. This is Bloomberg.
this will probably go down in history as one of, if not the largest financial crime ever.
I cannot imagine a scenario where $8 billion just disappears.
Bankman-Fried has pled not guilty to multiple fraud charges.
Sam was just too important in the crypto community.
When someone says, I'm going to give $1 billion in the next 2 years, like that catches everybody's attention.
As time went on, their ideas got like weirder and weirder.
I don't think he even had almost a conception at some points that it was wrong or right. I think he just had the mentality that he has to win.
This committee will not stop until we uncover the full truth behind the collapse of FTX.
Sue, Mark.
Are you in? I'm in.
I'm in.
We're in. Will this be the last of its kind? No. This is the nature of capitalism. Get over it.
Economic Forum kicks off here in Davos. Day one, global leaders from the worlds of business and politics gather to grapple with some of the globe's biggest challenges: conflict, climate, and of course the impact of artificial intelligence. Now, President Zelensky is said to be planning to meet with the JP Morgan chief executive, Jamie Dimon, here in Davos as Ukraine seeks aid to rebuild, with calls for help being eclipsed by the Middle East conflict. And in the U.S., lawmakers unveil a stopgap spending bill aimed at averting a partial government shutdown later this month. Meanwhile, the first official contest of the 2024 election takes place tonight. We'll discuss that with some of our biggest names in Davos. Well, good morning again, everyone, and welcome to our special coverage from Davos. I'm Francine Lacqua. Now, over the weekend, John Kerry said he's planning to step down as the U.S. Special Presidential Envoy for Climate Change. The former Secretary of State has spent 3 years relentlessly pushing for more aggressive global action against rising temperatures. His efforts have been described as heroic by the former U.S. Vice President Al Gore, who joins me now here in Davos. Vice President Gore, thank you for joining us.
Of course.
There's a lot going on. I don't know when we look at the policies surrounding climate change, whether it's slipped down because of conflicts in the Middle East, because of conflicts in Ukraine, and what you're expecting here in Davos.
Well, I think there's going to be a lot of fruitful discussion about climate here. I hope we can make some further progress. So, you know, the conference in Dubai, where you did such great coverage, ended with an agreement to phase out fossil fuels. Some of those who signed up to that pledge are now trying to claim it was optional and trying to walk it back a little bit. But it's an important commitment that must be kept. As for your question, will it fall down the agenda? I don't think so. Mother Nature has other intentions. Unfortunately, the climate-related extreme weather events, they're underway right now, today, every day. And we're continuing to add a huge additional amount of heat-trapping pollution to the sky every single day. The good news is that once we get to true net zero and stop adding, the temperatures will stop going up almost immediately with a lag of as little as 3 years. And if we stay at true net zero, half of the human-caused greenhouse gas pollution will fall out of the atmosphere in as little as 25 to 30 years. But getting there is very tough. It's a big if. But it's not an impossible if, because we now have better technologies that are cheaper in almost the entire world without
pollution. Decades ago, one of the Saudi energy ministers famously said to his king, "We better remember that the Stone Age didn't end because of a shortage of stones. It ended because something better came along." Well, something better has come along to replace fossil fuels, but the power of the fossil fuel industry and the petro-states that depend on that revenue it has been a major obstacle blocking progress. Little by little, that's beginning to give way. And I want to thank my friend John Kerry for his terrific service to the U.S., and I think people around the world owe him a debt of gratitude for his tireless work.
What does John Kerry stepping down mean for efforts on climate change?
Well, he'll be hard to replace because he brought the stature to have the kinds of meetings that a climate envoy needs to have. And of course, he shouldn't be judged just by the final result in Dubai. He's been there for several COPs. And you know, in the Summer Olympics, when they judge the diving competition, the degree of difficulty has a great deal to do with the final score. And he undertook a tremendously difficult task and really did a terrific job, in my opinion.
Vice President, you've called for the way that COP works to change.
Yeah.
Will it? Are people listening?
I think they are. It's difficult to change it, but I think the time has come. Because, for one thing, look, this is the second year in a row we're going to have a petro-state hosting the COP with an oil and gas veteran as the president of the COP. Come on. I mean, really, and the percentage of revenue coming from oil and gas in Azerbaijan, the host of this year's COP, is even larger than what it was in the United Arab Emirates. And it's not that they're bad people or have bad intentions. They just have a structural conflict of interest. Also, there is another problem. When the UN selects different regions, they rotate through regions of the world, as you know. And any nation within that region has a veto power over where the COP can be held. So Russia, in this instance, said, no, you can't have it in any country that has sane policies. My editorial ad there, any NATO country, etc. And so it ended up in one of the ancient homes of the petroleum industry. Again, I personally believe that the Secretary General should have joint authority with the host nation to name the president of the COP. Secretary General Guterres does not want that authority, and I understand that, but I think the time has come to reform this process. The world is getting understandably impatient and frustrated that these conferences are rigged. They're rigged. The deck is stacked in favor of the fossil fuel industry.
But we did have agreements. So again, how do you match the two?
Such as they are. There's so many loopholes and so many tricky phrases. And it took 28 COPs, 28 years of COPs before we even could use the phrase fossil fuels. The climate crisis is a fossil fuel crisis. That's what it is. And yet it's taken us this long to overcome their resistance and even naming the problem.
What happens to climate change pledges from the U.S. if President Trump has a second term?
Well, first of all, let me say that I think that in spite of the loopholes I mentioned in this agreement, and in spite of the frustration many of the climate advocates, such as I, have felt about it, nevertheless, we see the direction of travel, as they use that phrase, for both business and government, shifting inexorably toward low carbon, renewable energy, and toward net zero. We see the same thing here at the World Economic Forum. This place is sometimes criticized. It's unique in bringing all kinds of people together in a way that doesn't happen anywhere else. And your question was,
if President Trump gets into the White House, what does that mean for climate change?
Well, first of all, I of course hope that doesn't happen. There are many of my fellow Americans who are for him. You know, look at the last time when he became president, we continued the march toward renewable energy.
On the business side.
Yeah, on the business side, and state governments continued to pursue carbon reduction. Here in Davos, a Republican red state governor from Georgia is leading off talking about the virtues of electric vehicles. We are seeing with the legislation that President Biden got passed, the Inflation Reduction Act, as it's called, the biggest climate legislation any nation's ever passed in history. We're seeing a change in the political realities on the ground in the U.S. with the creation of tens of thousands of new jobs in electric vehicles, batteries, wind, solar, efficiency, green hydrogen, and now some of these red states in particular, they're now seeing the benefits of all these new jobs being created. It's really changing the reality.
Do you think Donald Trump won't try and touch that?
I wouldn't even begin to predict what goes on in his calculations. And of course, tonight we will see the results of the first contest, which all the pundits tell us he's likely to win. But in New Hampshire, it could be a different story. I'm not a political pundit myself, so I won't opine on that. But I don't think, even were he to be elected, and I know that kind of looms over many people's calculations these days, even if he were to win, I think we would see a continuation of this progress towards zero carbon.
I mean, we'll talk a little bit more about that. I think you are a political pundit, maybe, you know, just well, as many as the others. I don't claim to be. Al Gore is staying with us here at Davos to discuss also this year's U.S. presidential election. That's coming up next, and this is Bloomberg.
Was around so many powerful people in my entire life. From the time I got married to Robert Kardashian and had a whole ecosystem of businessmen and entrepreneurs and people running studios, and you know, any given day it would be the head of a studio, and you know, just often paid attention without really realizing I was paying attention. And I had a very amazing education. I was a housewife. I was raising 4 kids at home. I had the most blessed situation, but at the same time surrounded by these business situations that I didn't even realize were happening right in front of me, but I must have been absorbing it because there's so many times I've like brought up in my mind one of those conversations that I had learned from. And so I think I had a very lucky and blessed existence that way.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Now, voters in Iowa have been urged to defy extreme cold weather and make their voices heard. The first Republican presidential caucuses are taking place in the state, with Donald Trump, Nikki Haley, and Ron DeSantis battling it out for the Republican nomination for the White House. Now, the former U.S. Vice President Al Gore is still with me. I mean, Iowa is huge. It's actually one of the years where it also matters the most. Do you think President Trump will have a second term?
I don't know. I really and truly don't know. I know that many people feel it's moving in that direction. I'm not so sure myself. And where the Iowa Republican caucuses are concerned, I'm not sure they're as significant as some believe, because there have been so many examples. Well, last time in 2016, Ted Cruz won the Iowa caucuses going away, and then it mattered not a whit. We've seen others win the Iowa caucus on the Republican side and then disappear. On the Republican side of the fence in Iowa, that state has become far more conservative than any other Midwestern state. And I think the Republican side of Iowa is a little bit out of touch with the rest of the country now. New Hampshire next week, independents are able to vote. It'll be a truer test of what's really going on.
But it feels like across the board that Donald Trump is so far ahead in the polls compared to, is it a given that he has a nomination for the Republican Party, or you don't think so?
Well, I don't want to think so you have to take that into account when you hear my answer. But I don't think that it's a foregone conclusion. I know my view in that respect is at odds with what most of the professional political pundits say, and I claim no expertise on that. I've been through the process. I've run 4 national campaigns, and I've seen it from that perspective, and I've seen a lot of surprises over the years. And something tells me this may be a year of significant surprises. Again, I hope it's the case because I don't want to see him renominated and reelected.
Is there anything that the Biden camp can do to convince voters that he's the right man for the job? Again, if you look at legislation, if you look at what he's passed through, he should be polling much higher.
Yeah, that's right. And it may be that there is a little bit of a lag in voters' perceptions of how the economy has improved, and particularly in how inflation has come way back down. And it may be that 10, 11 months from now, we may see a significant shift in his favor. I've learned over the years that, in my opinion, the presidency is a team sport, and I think that his team is as good as any that has ever occupied the executive branch in the U.S. And if you look at his management of the economy, his management of foreign policy, his management of a whole number of issues, it's really producing results that over time I think will change the way he's perceived in the current polls, but we shall see because time will tell.
Could he change the ticket and run with someone else? Or?
Well, listening to what he has said about that, I would say that he has no intention of doing that.
Vice President, when you look at when Americans go to the polls and are in the booth and vote, what do they vote on? Does climate change factor in what they want, or is it purely on the economy?
Increasingly, climate is a voting issue and a top voting issue for a growing number, particularly young people. The latest polling in the U.S. shows that more than 60% of the American people make it a top priority issue. And young people, oh my gosh, there's a real generational divide. Even among young Republicans, almost 2/3 of young Republicans are really eager to change their party's position. And as these extreme weather events continue to remind us that this is suicidal what we're doing, you know. It's crazy to keep going like this. And we've had so many multi-billion-dollar events that, and it's the developing countries that are hurt the most. And continuing to burn these fossil fuels also kills almost 9 million people a year just from the co-pollution of the air pollution. We're seeing the sea level rise. Even today, there are all these images of homes being washed into the sea. I mean, this is making it a voting issue for many people. It is also an economic issue because it creates 3 times as many jobs per dollar invested in the sustainability economy than the old dirty fossil fuel economy.
But in the booth, Vice President, what do people actually think about to put?
Traditionally, the economy is the number one driving issue, but what I'm saying to you in response, and I genuinely deeply believe this, increasingly climate is coming into their calculations. Not for the majority of voters yet, but it is a very important issue.
Very good. Thank you so much. The former U.S. Vice President there, Al Gore, with a hopeful message, actually, of where climate change sits on the thinking of Americans. Coming up, we'll be joined by Alicia Haas, the Chief Financial Officer at Coinbase. We'll discuss last week's approval of Bitcoin ETFs and what it means for the future of crypto. That's next, live from Davos, and this is Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
Today's CFO has to be much, much more than a bookkeeper.
One of the most important things is looking around the corner.
We have to let go of the traditional legacy department store.
Their impact goes far beyond the balance sheet. And on Chief Future Officer, they focus on much more than just revenues and margins.
You also have to be credible business leaders in order to really impact the business and steer the direction.
We are like biologists. We need to deeply understand the financial DNA of a company.
People just come with a playbook and say, okay, we're going to roll that. Don't do that. Think longer term.
It's an amazing time to be in this role. It's a lot more than the profit today. It's building the future of tomorrow.
Get passion, perspective, and more from the chief future officers of some of the world's most influential companies. A new episode every month, only on Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg, top experts, great questions.
Bitcoin has posted its worst streak in about a month as fanfare cools over the new exchange-traded funds. Now, the approval of Bitcoin ETFs last week by U.S. regulators was, of course, seen as a landmark moment for crypto, broadening access on Wall Street and beyond. Well, I'm delighted to be joined now by Alicia Haas, the Chief Financial Officer of Coinbase, a cryptocurrency exchange company. Alicia, thank you for joining us. I mean, everyone was talking about ETFs and Bitcoin last week. It was quite exciting to see it approved, although the SEC said, look, this is not a value judgment, the fact that it's approved. Do you see momentum from this being quite a game changer?
Absolutely. This was a landmark day for crypto. This really brings Bitcoin into a much broader investable asset class for trillions of dollars of assets. Previously, RIAs, many wealth managers, pensions couldn't access spot crypto, and this gives them a vehicle, gives them a very familiar wrapper that they can now access through the traditional securities markets. So we think this is a wonderful step forward, bringing crypto to mainstream and bringing our goal of bringing crypto to 1 billion people around the world.
So, Alicia, have you seen an uplift? Have you seen momentum from last week? Have you had extra
We've definitely seen dollars flow into the ETFs. What I'm so proud of is the markets have been stable, though. This was a long-anticipated transition, and we're starting to see the gradual growth that we expected.
What does it mean for hiring, for example? Are you hiring more people? If you look at Coinbase in the next 12 months, where are you hiring and to what purpose?
You know, we have been really happy with our headcount over the last year. We are being incredibly efficient. What we saw last year is we brought our costs down meaningfully, but our product expansion grew tremendously. We introduced Base, a layer 2 blockchain. We grew derivatives, both in the U.S. and outside the U.S. We introduced an international exchange, and we launched in many countries around the world. So we are seeing growth and efficiency. We're going to be adding headcount in 2024, but it will be all in pursuit of our roadmap. So growing internationally, continuing to expand to our retail and our institutional customers.
Any regions particular that you're looking at? Or are you, for example, moving some of your U.S.-based employees outside the U.S. elsewhere?
No, this will be net new hiring in new local markets.
Okay, what are you most excited about in the next 12 months? You know, crypto and exchanges have had a bit of a wild ride over the last 18 months. Are you expecting stability, or are you still kind of on the lookout?
It is so important to zoom out when you look at crypto. So I've been at crypto for 6 years. Coinbase has been here for over 12 years. We've had quarters and months that were up. We've had months that were down. But when you zoom out, we've had this really nice upward trajectory over time. Growth in users, growth in products, growth in countries, assets, crypto market cap, but it's on a long-term basis. We are investors for the long term. So what I'm excited about for the next 24 months is just continuing to roll out products to our customers. We're looking to really grow our institutional product offering. We're looking to expand internationally. And I think we're going to see a lot of activity on our layer 2 solutions. So it's going to be a good year.
When you say expand internationally, is it Asia? a region that actually has embraced and will continue to embrace crypto with more open arms.
Just last week we introduced a partnership with Yellow Card where we're expanding into Africa. We're going to bring stable coins to the local market. We're seeing a lot of daily use cases around payment activity, which we're really excited about. But this year we launched, or 2023 I should say, we launched in Canada, we launched in Brazil, Singapore, and we're looking to really make steady growth in those markets that we're in.
So, Alicia, I think you've actually launched an international exchange, right, since December.
Absolutely.
I think it was early December. Can you give us an idea, again, of numbers, of flows, of how exciting that is?
We can't talk about numbers quite yet. We'll be introducing earnings in February, but we're starting to see good traction on the international exchange, which is opening up to a long tail of countries for access to the spot and derivatives markets.
Can you give us a glimpse into what else you have in store for us in 2024 in terms of new products?
2023 was a big year because we announced asset management for the first time. We announced derivatives. We have many new products that we just got launched that we're now looking to grow. So I don't expect 2024 to be a big announcement around products. I expect us to see expansion and growth in many of our existing products, but we've just got a toehold in.
Okay, so this is your first Davos. What are you most excited about? You have like a million meetings.
We do. What I'm really excited about is Davos will really help us with our Go Broad and Grow Deep international strategy. There's many global leaders here. There's an opportunity to talk about crypto regulation. There's an opportunity to talk about how crypto will really benefit their users and their markets, and how Coinbase is a trusted counterparty, and how we bring a different brand to the markets. And so we're really looking forward to the meetings that we have on the schedule.
I mean, broadly, regulators, and I know they're different, from country to country, but do they understand a little bit better of what crypto is?
I would say that we're learning every single month and every single quarter, and the education that we have today is tremendous compared to a year ago, 2 years ago. So yes, and I think they're starting to see the differentiated between trusted and non-trusted brands, and trust really plays into the Davos theme this year as well, which I'm excited about bringing Coinbase's brand to that market.
Who do you think is a regulator that gets it most? I don't know if there's one.
Well, there's not one in particular, but what you see is now 80% of the G20 countries have crypto regulation. So MiCA is a great example in Europe. We announced that we were putting our MiCA hub in Ireland, and MiCA is a great regulation that's custom to crypto, but you see that in Japan, you see that in Singapore, you see that in many countries around the world, big financial centers. And so we're optimistic the U.S. jumps into this and gets this right, but we're definitely seeing a lot of thoughtful regulation in many countries.
Alicia, thank you so much for joining us today.
Thanks for having me.
Good first Davos. Alicia Haas there, the Chief Financial Officer of Coinbase. Now, much more still ahead from Davos, including interviews with the Bundesbank President Joachim Nagel. We'll speak to Nicolai Tangen, the Chief Executive of the Norwegian Wealth Fund. And of course, we'll also speak exclusively to the Chief Executive of the Qatar Investment Authority. He's Mansour Al Mahmoud, and it's just day one. Up next, we'll have a full roundup of your markets. Again, if you look at the number of participants here in Davos, it's pretty extraordinary. I think we have 800 chief executives. We have also a number of financial or state operators that have come here to talk about not only climate change, artificial intelligence, left, right, and center, and then we have, of course, geopolitics that will also be dealt with, as Alicia was saying, on this idea of trust. Up next, Bloomberg Markets with Danny Berger in London, and this is Bloomberg.
part of the baby boomer generation, and this generation is now increasingly dealing with problems relating to Alzheimer's, dementia, and so forth. Not particularly my age, but maybe some people my age, even younger, but obviously in their late 70s, 80s, and 90s, more and more we're reading about Alzheimer's. Is this an epidemic that you can't really do anything about, or is it something we can deal with in some way?
It's a real challenge for a lot of families, mine included. You know, I have a 90-year-old grandmother at home who's struggling with dementia, and providing care for her has been a real challenge. And for my family, we love her dearly. We want to be there for her, but where it's painful for us to see the toll dementia has taken on her. This is rightfully, a concern for families across the country. We're investing a lot in studying dementia, to not just Alzheimer's, but other forms of dementia, to understand what's driving it. But very interestingly, there's also some research that's taking place, lifestyle research, if you will, on the impact of diet, of social connection, of physical activity, and sleep on dementia as well. Dean Ornish, professor at the University of California in San Francisco, has been actually one of the key folks, who has been leading some of that research on the impact of lifestyle and dementia. This is a promising area.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure. Don't miss Bloomberg's interview with the
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
Good morning from our studios in London. I'm Danny Berger, where it's 10 a.m. in London. U.S. markets are closed for the Martin Luther King Jr. holiday. Welcome to a special edition of Bloomberg Markets. Here's what you need to know this morning. China's central bank holds a key interest rate as currency woes give way to what some believe will be a difficult year. A U.S. fighter jet shot down an anti-ship cruise missile fired from the Red Sea from a Houthi-controlled area of Yemen, the U.S. military said, adding that there were no injuries or damages reported. And U.S. lawmakers released a stopgap spending bill to avert a partial government shutdown as Iowa Republicans brave frigid temperatures on their way to today's pivotal caucuses. These supposed to be something like negative 25 degrees Celsius. I do not envy you if you're heading for the polls. Elsewhere, yes, it is a slow day to start the week. U.S. markets are closed. European stocks are lower, down by about 0.2%. Goldman out with a bearish note today, saying that given positioning, the bulls are crowding into stocks to a dangerous degree, and this is likely to reverse. U.S. cash markets for the bonds are closed, but you do see futures trading lower. On Friday, it was PPI that had another rate cut bet fuel added to it. We saw some 80% chance now that the Fed is going to be cutting in March. Again, PPI fell 0.1%. The expectation was that it would rise 0.1%. Two-year yields in the U.S. fell to their lowest since May. In Europe, Germany dodging a recession. GDP fell 0.3% in the last quarter, but the quarter before that got a revision, so no consecutive quarters of decline. The euro was stronger. Now it is weaker, but I should say bonds in Europe are selling off ever so slightly, sort of tied to that. Now, one area where we are seeing action, it is Japan. The Nikkei, still the beloved child of this equity market. It is trading at a 34-year high. Two-year yields did trade below 0%. They're just barely above that at this moment. The yen, after 2 months of strengthening, has begun to weaken again. It's above 145, the dollar versus the yen. It is this longer wait for the BOJ to normalize policy, and of course the American rate cut euphoria is also helping with that. story behind Japan. All right, let's now get to our guest for this half hour. It's Peter Kinsella, Global Head of FX Strategy at Union Banco Privé. Peter, for the yen bulls, it's just been a lot of disappointment for the past couple months. Do they get vindication this year, or is it more disappointment?
I think for the coming 2 or 3 months, it's going to be a bit more disappointment. There's a few things going on. The first is that if we look at Japanese inflation, it's not doing an awful lot. And certainly the latest wage data didn't really give us, further impetus to sort of put on a long yen position. The BOJ obviously didn't move in December. There were increasing concerns about whether they will in March. So it's really kind of March is now becoming a very pivotal moment for the BOJ. If we look at the dollar side of the equation, certainly U.S. inflation dynamics are cooling. You saw the latest PPI print, and now we priced in further rate cuts in the U.S. And we're also now talking about reducing the pace of QT, from the Fed's Williams. So really kind of indicates to me that downside in dollar yen initially will be more of a dollar-led move before we see the BOJ moving.
But I mean, can you, like, in positioning for that and getting ready for the BOJ to move, how sure do you need to be? Because obviously the negative carry associated with the yen right now is pretty painful.
It is, yeah. And I mean, if we look at just the data calendar, right, for the coming 6 weeks, it's not really an awful lot that gets you excited from a yen perspective. So really, it's a question of putting it on. But it'll be putting that short position on, I think, coming into March when we get the Fed moving, and then this potential change in narrative from the Fed. And that to me is really when to put it on, not before certainly.
Are you surprised on Friday when we saw, I think, front-end rates drop some 24 basis points? The dollar didn't really move with it. I mean, it was basically unchanged. I think the dollar, the DXY, was even maybe slightly weaker. I mean, is this just there's more skepticism priced into the FX market than the bond market?
I think that's probably fair. I mean, if we look at the dollar broadly speaking, it's trading somewhat weakly compared to sort of G7 aggregate spreads, right? So it is kind of ahead of where it otherwise should be. That said, I think on the CPI print that we had last week, there was kind of something for everyone in that data. The month-on-month print a bit higher, year-on-year, et cetera. So I think really markets just want to see a bit more sort of data and confirmation that the Fed moves before we move to put on an increasing short dollar position. So to my mind, again, it's just a waiting game. I think certainly euro dollar over the course of the year, we should see it rise. Probably 115 by year end is reasonable. Not a huge move, but at the same time, the dollar tends to correlate that bit more strongly with the level of the interest rate rather than the spread.
I feel like you're just in a waiting game right now, Peter, for so many things. What do you have conviction on? What trade are you confident you could put on right now?
Right. I think certainly at the moment, I dislike cable being as at current levels of where it is. I think that, if we look at the pace of UK inflation declines, the rhetoric from the BOE is still pretty hawkish. And so on that basis, I can see some scope for a potential change in narrative and then cable trading lower. And certainly data in the UK they've been by no means spectacular. We've got CPI and unemployment data this week. We'll see what happens there. But certainly I think there's scope for cable to trade lower, probably towards 124-ish.
Okay, 124. Just before we let you go, Peter, on China. So yuan mildly, definitely mildly perkier after the PBOC left their key rate unchanged. A lot of people were expecting a cut. We didn't get that. Is there some degree, though, where China needs a weaker yuan, that policymakers need to allow that to happen and get that export-fueled growth back into China?
I think it won't do an awful lot in the sense that we're already seeing sort of the friendshoring, nearshoring argument, really playing out in the last 3 years. So, Chinese exports to the States are certainly not what they were 5-10 years ago. And so the weaker yuan in that context doesn't really help an awful lot. Certainly it would do them no harm, given that they've got very, very low levels of domestic inflation. But again, really, I think if we look at PBOC, they're very much a stability-focused central bank, particularly as regards the currency. So I think we can expect incremental easing from PBOC, but there's nothing really that suggests to me we're going to see a huge game changer anytime soon.
Is China then exporting deflation to the world?
But clearly. If we look at the PPI data from China, it's clearly exporting deflation, particularly on the goods side, less so elsewhere, but on terms of manufactured goods, traded goods, definitely, no question at all.
Okay, Peter, we're going to have to leave it there. Thank you so much for joining this morning. Always appreciate your time. That's Peter Kinsella of Union Banco Privé. Okay, coming up, conflict continues on the Red Sea, leading to further disruption to shipping in the region. We're going to have more for you on that next. This is Bloomberg.
maybe I should go do something else. I can't do anything better than I'm already doing. I've already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself. Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money. We made our shareholders a lot of money. More importantly, we've grown the business, and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups who we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg. Context changes everything. The 2024 nominating contests are here, and the candidates are making their cases to voters in Iowa ahead of the caucuses. Bloomberg is live in the ground, bringing you the fastest news.
Trump is leading by a long shot.
Insightful interviews.
And at the end of the day, that's what the American people want.
And the most informative analysis about what it all means for November's presidential election.
What is your path to the nomination?
Coverage starts today, only on Bloomberg. Context changes everything.
It's a special edition of Bloomberg Markets on this MLK holiday in the U.S. We're still up and trading here in Europe. I'm Danny Berger in London. Okay, to geopolitics. The U.S. says it has shot down a missile launched from Houthi-controlled Yemen towards one of its Navy destroyers operating in the Red Sea. I'm joined now by Roz Matheson, our EMEA News Director. Roz, is this a different turn in what we've seen in terms of the Houthis, if they're firing directly towards a Navy destroyer?
Well, they arguably were already targeting military assets in the region, although primarily they were trying to disrupt commercial shipping. But what the message really is from this is that despite that joint airstrikes from the US and the UK late last week, followed by another targeted airstrike on the Houthis in Yemen, the message is we can still strike back and we can still target shipping in the area, be it military assets, be it commercial assets. The message is the same because, of course, the Houthis have been under aerial bombardment for many, many years now. They know how to hide stuff and they know how to protect their assets, their military assets, particularly their rockets, their missiles, their drones. And what they're saying is, despite that coordinated action late last week, they can still try and disrupt shipping in the area. The question is, does it force a further military response from the US and the UK and other allies in the region? Does it lead commercial shipping to be disrupted for even longer? Do they take the call, well, it's still too dangerous to go through? And that's really what the Houthis are trying to do, is cause these problems for an extended period.
Well, on that front, I mean, again, extended period yet to be seen, but the here and now, it certainly is disruption. Where do we stand on those commercial ships who are willing, who are able to go through the Red Sea? Are the numbers just stacking up of those disrupted by the action in the area?
Yes, well, we know it's been disrupted for many weeks now already. They're having to take a much longer route around, and that's adding, weeks potentially to some of these shipments. But we do know from this morning that Qatar seemingly has paused the shipments via LNG tankers through the area. That's primarily to supply Europe. A lot of that gas comes to Europe. It's not really impacting the market this morning because the storage of gas in Europe is still pretty high. But certainly you've seen Qatar take that action this morning. The question is, do other countries follow? From gas, do you go to oil and so on? And so is it taking that extended leg, again, that's going to start to impact oil and gas, potentially not supply, but certainly keep that premium into prices for longer?
Roz, what a great setup for what we're going to discuss next. It's almost like you knew. Roz, thanks so much for joining us. That's Bloomberg's Roz Matheson. Now, on that note, Roz just mentioned this, that Qatar paused sending LNG tankers through the Bab el-Mandeb Strait after U.S.-led airstrikes on Houthi targets in Yemen raise risks in that specific waterway. To discuss that side of this, it's Senior Executive Editor for Commodities, Will Kennedy. Will, as I was speaking about with Roz, before it had been about commercial ships going through, it wasn't really about the energy complex. What does it mean to now have, obviously the reaction for nat gas today isn't massive. We'll talk about that in a moment. But what does it mean to now have LNG tankers who are unable to cross the strait?
It will depend entirely on how long that remains the case. They've clearly taken a pause in reaction to the military action we saw at the end of last week. The real question is how long that lasts. That will depend on whether there's further military action in the area, whether how comfortable Qatar feels about going through those straits. So in the short term, it's very manageable. If it were to persist a very long time and they had to send that gas around Africa, that would clearly strain the LNG fleet and may put some pressure on the market. So that's the key question.
And we're also in this period right now. I mean, you and I feel it by going outside. It's extremely cold. In the stat that I love in Iowa, where people are voting right now for the caucus, it's negative 25 degrees Celsius. Are you surprised that nat gas prices aren't climbing more, given both a possible disruption and just overall the cold weather?
We see cold weather both in Europe and in the US. It's not quite as cold in the US as it is in Iowa, but it's pretty cold for the time of year.
Yeah.
It was well below freezing this morning. But I think it's January, and up till now we've had quite a mild winter both in Europe and in North America. That's mean that gas stockpiles are very high for this time of year. We're well supplied, and although it's January and it doesn't feel like it, from a gas trader's perspective, spring is within sight. So speaking both about the LNG situation with Qatar and the cold weather, the cold weather will increase gas demand, but there are supplies, and the gas market can probably absorb it because it will only last a week or two.
So wait, when we're talking about the timeline for this to go on long enough for Red Sea disruptions to become a bullish thing for energy and commodity traders, what is that timeline then? Because again, what you're describing is enough stockpiles to survive a couple weeks and a cold weather. I mean, what is that timeline then?
I mean, the main impact will not be at this stage in the flow of oil and gas, because there are no gas production or oil production in the Red Sea. It is basically about the time it takes to get oil and gas from the Middle East to market. And that means you're having to send ships around Africa. And we've seen with the container market, where that's been going on for some time, it has seen freight rates go higher. So if it were to happen for weeks and months, the way it would feed through into the market is that the freight rates for gas, for oil, would go higher, and that would feed through to the consumer. So it would probably be marginal, and it would probably take some time, but that's what people will be looking for as the feed-through mechanism.
Okay, Will, thank you very much for joining us this morning. That is Bloomberg's Will Kennedy, and we are looking at oil prices again, still below $80 a barrel, even though they inched above that level for Brent crude on Friday. Okay, still ahead on the program, we're going to hear from BlackRock Vice Chair Philip Hildebrand. He's at Davos. That's next on Bloomberg.
How are you feeling right now about the state of the industry and what it's going to look like in the next couple of years?
The big picture is it has never been more, I would say, volatile. I mean, it has, but it is continues to be volatile. But like you said, we did see real signs of life this summer. So generally speaking, box office is down globally around 20% to 2019, so pre-pandemic levels. But this summer, it was 5% down, right? So it would suggest that even though there were winners and losers of this summer, and obviously we had the two big juggernauts with Barbie and Oppenheimer, you know, movie-going begets movie-going, right? So when there's a season filled with, you know, good movies that people want to see, you know, I was made to feel pretty optimistic about what we saw in the summer.
This is Bloomberg News Now.
News when you want it at the touch of a button.
Another volatile day on Wall Street. We're seeing big moves.
All eyes on Capitol Hill as Democrats and Republicans prepare.
Today's job numbers casting doubt on the Fed's next move. Inflation remains front and center. And that's news when you want it with Bloomberg News Now. Get it 24/7 on the Bloomberg Business app, Bloomberg.com, and anywhere you get your podcasts.
Bloomberg News Now. Context changes everything.
This is Bloomberg Markets. I'm Danny Berger in London. Davos is now in full swing. It was the first day, and Bloomberg's Francine Lockwell caught up with BlackRock Vice Chair Philip Hildebrand.
The last year has been a story of pandemic savings that have been run down by consumers, so very strong consumption. And then we should not forget government spending has increased dramatically, particularly in the U.S. And so you've seen these two forces that have kind of been a countervailing force to the contraction that we've seen in capital markets through tighter interest rates. Probably most people have been surprised. The question now is how much longer can this go? How much longer can you have government spending the way we've seen it? How much longer can you run down these pandemic savings? And that's going to be the story, I think, of this year. In a sense, it's the final normalization of the post-pandemic adjustment.
So what does that mean you're watching out for this year? Again, you know, we started last year thinking that we could see a huge recession in the U.S. We were worried about corporate default, and we haven't seen any of that.
That's right. I think the story in the next few months is going to be goods inflation is going to continue to drop quite rapidly. We have now negative numbers, and that, you know, basically brings down the overall inflation numbers quite dramatically. And as a result, the markets have now priced in what I think is probably excessive interest rate cuts in the U.S. But that's going to run out at some point. This is the final leg of the post-pandemic adjustment. So by year end, I would say we're going to be done with that, and then goods inflation is no longer going to drop. Service inflation, wage inflation is still very high. And so I think the story is going to be, you know, at some point we're going to realize that it's not that easy to kind of stabilize the 2% inflation target that central banks are looking for. And so some of the optimism in rates right now in the U.S. in particular is probably overdone.
Is there something that you worry that's not being priced in correctly in the markets?
Well, at the moment, I think, if anything, I'm a little worried that we're sort of priced for near perfection, a sort of almost perfect soft landing, where inflation, you know, is gone as a problem, where maybe central banks could even cut in the face of any kind of potential weakness. I'm certain that what we're going to find is that this inflation has become stickier than we think, or than the market thinks right now, for various reasons. We have lower growth, we have very high government spending, we have a fractured, you know, geopolitical system. So all this basically raises cost, and what we're going to find as inflation drops now, mostly driven by goods prices, by the end of the year we're going to realize that it doesn't settle easily at 2%, let alone at something less so that you cut rates. But I think, you know, more likely we're going to settle probably slightly above 2%, which means central banks are going to have to stay on alert.
So do you worry about the cost of money, actually the cost of credits? And this could be because of what we've seen in the last 18 months, but actually could be also much more structural reasons.
Yeah, I mean, look, I think one of the stories of the last decade really is a lot of investments have been done by way of financial engineering. And in some ways, we're going to have to get back. This is another reason why we prefer infrastructure over private equity. We're going to have to get back to kind of long-term macro trends, and realize that financial engineering, when interest rates are higher than they have been for decades, when growth is lower, when government spending is going to be constrained, financial engineering-driven investments are going to be much, much harder to find. And so I think in some ways it's a healthy correction towards, in a sense, kind of returning to investing really on fundamentals as opposed to a lot of leveraged debt and financial engineering.
When you talk about risks, I mean, it's pretty incredible to think, of what's happening in the Middle East and the fact that the market has barely taken notice. Maybe there's a bit of move on the oil price, but there's attacks, there are drones, there's the Houthis, there's Yemen, there's Ukraine. We also don't know who becomes the next president of the United States. Like, how do you deal with all of these unknowns?
It's hard. I think the overall story is that we've moved towards a much more fragmented geopolitical system, therefore a much more fragmented global economy that is organized in a sense in blocks. That means a loss of efficiency, that means higher cost, and probably means on balance a lower potential growth rate for the global economy. Now, the focus has to be on maintaining the conflicts and where possible to try to solve them or stabilize them. In a sense, the good news is that a lot of these things are man-made. Demographics, there's not much we can do about it. That lowers potential growth. Fragmentation, in a sense, we can address. We could find a way to stabilize the situation in the Middle East. We could find a way to ultimately move towards some sort of ceasefire discussion in Ukraine. And we can, we could stabilize relations between the U.S. and China. So a lot of this, in a sense, has been man-made in recent years. It's a problem. It weighs on markets. It weighs on the global economy. And hopefully discussions like this can be a contribution towards lessening these tensions and moving back towards something that is a little less fragmented than what we currently have.
Is that likely?
Well, it's, that's, I suppose at some level, the simple answer would be not really when you look at the current state of play. On the other hand, the cost of this fragmented system over time, I think is going to drive political leaders and political system towards trying to address those things that we can address. Some things we can't. Demographics, there's not much we can do about it. We can hope that perhaps productivity can be boosted, whether it's through AI or other means to make up for some of it, but there's not much we can do about it. On the fragmented state of the global economy, in principle, these are things that can be addressed through good policy making.
What does a second-term President Trump mean for the world economy?
Well, this is Christine Lagarde talked about it the other day. I think you're going to see her later on today. Certainly from a European perspective, from a kind of globalist Atlanticist perspective, it's of course a great concern. We've been there before. We survived it, so we'll see what it means. I think the question overall will be, does it lead to even more fragmentation in the global economy? And, if that's the case, the cost of that will become quite apparent.
A wide-ranging conversation between BlackRock Vice Chair Philip Hildebrand speaking to Francine Lacqua at Davos. Well, if you were to open up your microeconomic textbook and look at the phrase buy the rumor, sell the news, you should probably now see a picture of Bitcoin on that, a textbook case of this. You can see when Bitcoin was approved, or when it was about to be approved, the ETF, the price went as high as 48,000. It's now declined some 8%. To trade just above 42,000, despite the flows going into the ETFs, not making much of a difference on the price. Okay, coming up on the program, we're going to be speaking to Freya Beamish, Chief Economist at TS Lombard. That's next here on Bloomberg.
cryptocurrencies had its critics and still has many critics. Blockchain, nobody seems to be against that as a concept, depending whether you use it properly or not. So you are still fairly bullish on blockchain technology?
Yeah, I've been a bit of a skeptic on cryptocurrencies themselves since inception, and in some ways proven wrong regularly as they have gained in interest and activity. But I've always been of the belief that distributed ledger technology or blockchain technology has applications in the financial services world that as yet are still underexploited.
Do you have a view on whether digital currency authorized by a government is a good thing or not? And do you think the United States is going to be at the leadership of that or following other countries?
It depends. So the benefits of a digital currency backed by a government are potentially greater ease of execution of transactions and greater visibility. If you use the central bank digital currency to intrude upon the privacy of the individual citizen or to eliminate the role of the retail or high street bank from the financial system, then there are potentially very significant implications. That could be a consequence of a central bank digital currency.
In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Watch Bloomberg ETF IQ.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Markets. I'm Danny Berger in London. China's central bank holds a key interest rate as currency woes give way to what some believe will be a difficult year. A U.S. fighter jet shot down an anti-cruise missile fired from the Red Sea from a Houthi militant-controlled area of Yemen, the U.S. military said, adding that there were no injuries or damages reported. And U.S. lawmakers released a stopgap spending bill to avert a partial government shutdown as Iowa Republicans brace frigid temperatures on their way to today's pivotal caucuses. So U.S. markets are closed. It's a much quieter day here in Europe. European equities are falling after being little changed on Friday. Goldman says that stocks are overly crowded, that the bulls are piling in, and that represents a risk. Meanwhile, yes, the cash trading is down, is not happening for U.S. Cash markets in the bond market. But here's your futures picture. It is weakening after a big rally on Friday after weaker than expected PPI. Odds of a March cut are now at 80%. Meanwhile, euro is weakening. It did strengthen briefly after data came out from Germany that revised the prior quarter that showed that Germany didn't have that 2 successive quarters of a decline, which would mean it's in a recession. So Germany, yes, it continued to dodge a recession despite output shrinking at the end of 2023 and across the year as a whole. Joining us now is Bloomberg's Oliver Crook, who is outside at a protest, not a protest rather, but to the farmers there, the farmers union, who is yes, indeed a protest. You can see it in the pictures behind Oliver. Oliver, the camera is also protesting a bit too, as you're a bit pixelated, but we're going to soldier through it. Look, there's clearly a lot of anger in the background. You can just hear it from the tone behind you. What is the public angst about right now, about Germany and about the Schultz government?
Yeah, I mean, Danny, this really originated as a consequence of the budget crisis that we talked about last year, and that was all theoretical. 17 billion euros missing. Where is that money going to come from? The answer was part of it cutting some of the subsidies and tax advantages to the farmers. That has obviously gone down like a lead balloon here in Germany, and there has been protests by the farmers for the entire week. This is the 8th day, and this is the day where farmers have come from all over the country. Some of them have been up since early in the morning. I spoke to one who from 5 hours on their tractor to be here, to basically park it on the front lawn of the Chancellor Olaf Scholz to express their discontent. So really, this is where the rubber hits the road. There is not enough money to go around, and as we see from the economic today, I mean, there's a contraction in Germany that only adds to the pressure. So here in the heart of Berlin, there are literally thousands of tractors miles long. We're right under the Brandenburg Gate. We're going to hear from the Farmers Association, and Christian Lindner, the finance minister, is apparently himself going to come and just speak on this stage right here in a little bit while, but really he is facing, he's a brave man to do so, because this is a group of people that is really not happy with this government, the entire coalition here in Germany.
Yeah, again, Oliver, I mean, you can truly hear it in the background there of that discontent. Oliver, thank you so much. That is Bloomberg's Oliver Crook for us right by the Brandenburg Gates. Right, joining us now is Freya Beamish, chief economist at TS Lombard. Freya, it's interesting. It's kind of this common thing we're seeing throughout the world. The data is not awful. It's not great in Europe, but Germany did avoid a contraction. You look at the U.S., the data is very strong too, at least stronger than many expected would be at this point. But on the ground, there is discontent. What do you think accounts for the mismatch between the data and the reality that folks are feeling every day?
Well, I think it has to be slightly different in different countries. But if we start with Germany, I think it's quite clear that policymakers have just over-egged the tightening. That there's been, from the ECB, there's been too much of a hike in interest rates and not enough of a turnaround yet. There's been also too much of a contraction of money. Your reporter was saying there's not enough money to go around. There literally is not enough money to go around. If we look at the money compared with business activity, compared with GDP, that has already returned to pretty close to 2019 levels, and the ECB is saying that they're going to take even more out. And if we look at closer to home in Germany, if we look at fiscal policy, the trajectory there is looks pretty much like the same old austerity. There's the OECD is even forecasting that they'll move into primary surplus within a couple of years, which is back to the same old of Germany trying to rebuild its trade surplus, and to do that by compressing the purchasing power of domestic consumers. So there's a macro reason for the discontent in Europe. In the US, it's slightly different because there's a lot more of a kind of an inequality stance to that.
When you look at the language coming from the ECB, Philip Lane spoke over the weekend saying that easing too early would be self-defeating. And then you look at the other language, still concerned about wage price gains, still want to continue with QT. Is the ECB, Freya, given what you just said, headed for a policy mistake?
Yeah, I think it is. I think we're already there. I think that they're looking very much in the rearview mirror at wage growth, which is sticky in Europe because of how wages are set in the European case. And I think that actually a bit of wage growth wouldn't be such a bad thing in terms of rebalancing the German economy in particular, rebalancing the European economy more broadly towards private consumption-led demand in a world where the export-led growth model that Germany has hewn to historically is gone. In fact, it's worse than gone. It's now a drag on growth because the main kind of export partner, or one of the main kind of export drivers in the 2010s was China, and China is now debt saturated, so they can't afford that kind of excessive investment in the types of things that Germany would have been exporting. And worse than that, China has now moved to be a direct competitor and to be undermining the German export machine by exporting their own EVs, and that whole lobby within Germany is very strong. And so what we're seeing now is that there's this kind of pushback against wage growth to try to keep Germany competitive and try to keep this old model on the road, when actually what perhaps would be a better thing is to say it's gone and to move towards a more balanced path of private consumption-led growth.
Even with all of that, Freya, European equities, risk in Europe has been surprisingly buoyant. It rallied with American markets to end the year last year. To start this year, yes, it's down, but nothing that looks like a recession or a challenged economy or even a policy error from the ECB. I know it's a cliche, Freya, but when is bad news for risk in Europe?
Yeah, I think, well, given where markets are at the moment, we're obviously not quite there. I think what we've been saying is that the big picture analysis for the kind of the 12-month outlook suggests that that policy tightening is going to come home to roost. There's a lot of kind of hope there, perhaps, in the leading indicators for the nearer term, based on the trade cycle, based on kind of Korean exports rising, based on some of the kind of the data that we look at to get an idea of where the trade cycle is going ahead of time. But again, things have changed. So when the Korean exports, which typically have been a kind of a good leading indicator of exports for the rest of the world, when that's turning up, actually what we're seeing is that a lot of that is about parts, auto parts, and it's more tied into the subsidies that the US is providing into their own markets. So again, the relationship between those leading indicators and what the likes of Germany can actually benefit from over the course of this year has very much changed. So I think there's a lot of people kind of buying into those stories at this stage. It has been a more benign environment kind of towards the end of last year, just because of Fed price cuts being priced in.
Right.
And so that's kind of benefited those high beta countries as well.
Yeah, the pivot party was certainly in. As you say, whether it continues will be yet to be seen. Freya, thank you so much for joining us this morning. That's Freya Beamish of TS Lombard. Coming up, Taiwan had a pivotal election this weekend, and the winner is someone China considers an instigator of war. We'll talk politics next. This is Bloomberg.
Connection lost.
I used to have a data point I used to share that 75% of the people had never heard a phone ringing. Just think about it. I didn't say had never used a phone. They'd never heard it ringing. Today, 75% of the African people have a mobile phone. They use one. Okay? And we will do the same with the internet in the next 5 years. You know, we will do it as an industry, as entrepreneurs. All we need is the space, and we need investment support, because we are the best investment case for this in the world.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
It's Bloomberg Markets. I'm Danny Berger in London. The race for the White House shifts into high gear later today. Iowa kicks off the Republican presidential nomination races. Donald Trump heads into the caucuses with polls showing a commanding lead over rivals Nikki Haley and Ron DeSantis. Joining us now for some analysis is Kriti Gupta. Kriti, can I first say I'm so happy we're having this discussion here indoors and not like negative 25 degrees Celsius weather
Yes, exactly.
in Iowa. So what is the latest besides everyone freezing their butts off voting in this caucus?
Yeah, well, it's really a test to their strength and just how passionate they feel for any of their candidates, really. And I would argue it's even more telling that President Trump right now is leading in the polls. I mean, the latest we've heard is he has about a 48% edge at the moment. That is 28 points more than his next rival, Nikki Haley, sitting at just 20%. And it's a really interesting spot that he's getting this edge in, because it's not just about the weather that he's braving, but he's really speaking to a demographic that is largely Midwestern farmers that are directly impacted by a lot of his trade policy with China. Think about the biggest exports coming out of Iowa: soybeans, corn, pork. These were the kind of pillars of his agricultural buying agreement with China. And this has been something that Iowan farmers in particular have felt very passionate about and very close to, simply because it affects the pricing of their good and their livelihood. And yet you are still seeing President Trump, the former President Trump, still kind of come out on top if these numbers hold.
Yeah, and again, will he cross that, psychological 50% threshold that maybe spells bad news for Nikki Haley and Ron DeSantis? And as this is happening, simmering in the background, is Congress still dealing with that strange two-parter shutdown avoidance? We did get from Congress a temporary spending bill. How much time have they bought themselves?
Well, the GOP has really been trying to frame themselves as the party of fiscal austerity and responsibility, not just within the United States, but to the rest of the world. Something that's being watched very carefully. And you're seeing this on two levels. One, to your point in Congress with Speaker of the House Mike Johnson, who, by the way, is coming off the heels of the chaos of Kevin McCarthy and really trying to create a bipartisan bill. So if he's found the stopgap funding bill, it creates a little bit more funding for energy, transportation, defense, but only for 6 weeks. But he's really kind of trying to fight off the more right-leaning members of his party that are saying that funding should be tied to more GOP-related causes. Think abortion, gun control, immigration, among others. But it's a similar story even in Iowa, where Nikki Haley, for example, is really campaigning as the fiscal conservative, as the person, as the candidate who's going to get the U.S.'s finances back on track. So as a party, this is kind of a defining moment in terms of how they're going to do that. Because, Danny, of course, as soon as the 2024 presidential election is over, in 2025, we hit those debt ceiling conversations once again. It's the first thing on the new president's docket.
What a joy. Kriti, thank you so much for covering this for us. That is Bloomberg's Kriti Gupta. Now, it is clear that 2024, which has so many elections, more than half the world's population voting, it is in full gear. We have the first election of the year. It is Taiwan, which went to the polls this weekend. Lai Chang-te of the ruling DPP party sealed victory in Saturday's election on the island at the center of U.S.-China tensions. Here's what Taiwan's new president had to say following his victory.
We are telling the international community that between democracy and authoritarianism, we will stand on the side of democracy.
Let's go to our chief North Asia correspondent, Stephen Engel, live in another beautiful night in Taipei. Stephen, you have someone elected, which China has had very strong words about before. Has China yet reacted, or what has been the reaction to this result?
Well, from Beijing, it's been fairly muted. Yes, there's been some comments. They did not name Lai Ching-te by name, but we all know their stance on the DPP candidate who is now the president-elect. He was the vice president under Tsai Ing-wen, the president who really irked Beijing for the last 8 years, calling these two people essentially separatists. But again, probably the most telling development today was a diplomatic victory that Beijing had. Nauru, a very small Pacific island nation of just 10,000 people, had been, diplomatically aligned to Taiwan, along with 12 other nations, a dwindling number, since 1980. But today, essentially the first working day after the election on Saturday, Nauru, out of the blue, decided to switch allegiances from Taipei to Beijing. And Beijing, obviously, extremely happy with that. No matter what the size of the nation, 10,000 people, people or 20 million people. It doesn't matter. It's a further step of Beijing isolating Taiwan on the diplomatic stage. And that is something Lai Ching-te, the new president-elect, is trying to counter because during the president Tsai Ing-wen's past 8 years, at least 5 Latin American nations, including El Salvador and others, Panama, switched their allegiance to Beijing. So they want to stop that domino effect. But again, Beijing, I guess, could claim a diplomatic victory by bringing Nauru on board.
When it comes to the economic consequence, Taiwan, of course, has the hub of the chip-making industry, $6 trillion or so tied to businesses in Taiwan that use chips. In this election, has it become clear what the implications for business, for this specific industry, will be?
Well, it's not going to change the dynamic right now. Obviously, in the last 4 years in particular, as Xi Jinping has consolidated his power in Beijing, as the Biden administration has unleashed export controls on advanced technologies, including those AI accelerators and chips against Beijing, Taiwan is going to be sort of in the crosshairs. That's why you've seen Taiwan Semiconductor Manufacturing, TSMC, start building plants in Arizona. They're building a plant in southern Japan right now. They're doing their risk mitigation. But here's an interesting little anecdote. On Saturday night, they had that press conference. You just saw the president-elect with his running mate essentially holding a press conference right after declaring victory. And it was an international and domestic press conference. But guess who they gave the first question to? International media. In fact, it was me. I'm sorry to say. It was me who got the first question. Could you imagine that happening in the United States if Joe Biden won or Donald Trump and say, we'd like to give the first question to the reporter from Taiwan? No, it would never happen, right? So it really emphasizes the point that they want to show to the world that this is a critical election and a critical victory. And my question was about chips. And Lai Ching-te essentially said he's going to do everything possible to protect that industry.
Stephen, I mean, again, it is notable that he gave the first question to international media, but no surprise, it was you. Everyone should give their first question to Stephen Engel. Steve, thank you so much for the coverage. That's Bloomberg. Stephen Engel, this is Bloomberg.
So let's go inside the boardroom. Let's suppose you win a proxy fight and/or you just get invited onto the board. You go to your first board meeting, and you're the person who's saying you can fix this company, and all of the others on the board of directors are saying, well, we're doing pretty well. How do you get received when you start saying, here's what I wanted you to do?
Well, first of all, we don't bring that to the boardroom. Our time is spent with the CEO, the chairman, the CFO, and share our plans with them outside the boardroom. We try never to solve an issue in a boardroom. Okay, it's always best done the day before, the week before, outside that room. We wouldn't be there if they really were doing well. So it's really hard for them to straight face and tell us we're doing well. And we presented with a plan.
Top names in climate finance are on Bloomberg.
I can't tell whether you're optimistic or pessimistic about climate finance.
A lot of great stuff is happening, but is it enough? No, it's not enough.
I'm biased. I'm a huge investor in both fission and fusion, and hoping that it comes in time.
Transition is not going to be an event. It's a process.
But at the end of the day, it's the right thing for the planet, it's the right thing for the industry, and there is business opportunity.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question. Great question. Best question I get all night.
Bloomberg, top experts, great questions.
At this stage, I think you have to take it as a context piece, which affects what you do on a day-to-day basis. We have set up 2 years ago a team which we call Revenue Growth Management, which what they do is that they simulate the effects on the consumer elasticity of price increases, so that we, on one hand, we are trying to adapt our prices to inflation, also the inflation of our costs, because grapes get more expensive, salaries go up, transportation is more expensive, and very importantly, glass has become much more expensive. You know, in some products, glass can be up to 50% of the cost of a product. So if that goes up, you have to adjust for that. So revenue growth management will, on one hand, you look at adapting your prices to your cost, and on the other hand, of course, you try to mimic what will be the elasticity of your demand in the different markets, so you kind of predict what the impact be, and you kind of readjust on that base.
One of the great accusations that I've come across is that the retailers and the producers jacking up prices, gouging the consumer, greedflation. Push back against that. I mean, is there any hint of truth in any of that, or is it just overstated?
No, that's clearly overstated. I think what we all try to, I mean, there's customer elasticity. If you go too far on your price side, you are going to lose out. So it's clear that we need to cover our costs, and costs are increasing. Sometimes we anticipate cost increases. Sometimes we come behind, but we have to adjust. But I think in the world of luxury, which we are operating, of course, with every price increase, you have to think about your product. Does the product yield that value? You know, in the last years, as long as I've been in this industry, there's constant investments in improving the product. For instance, since I've been at Moet Hennessy, we have gotten rid of insecticides. We have gotten rid of herbicides. That has created additional costs, but it also gives us a better product at the end. And so we are constantly investing in making our product better and better. Of course, that is on the product side, but then you have to transmit that to the consumer. And the consumer, the way you transmit it to the consumer is, of course, at the point of sale. So, and here we are back to retail. So what does retail do to the consumer, and how do we bring over to the consumer the fact that we sell quality products, and yet their prices increases because of inflation and because we constantly invest in them, and yet we want to seduce the customer to stay with us or come to us as we go this way.
We've got a couple of different issues at play here, haven't we? We've got still a number of events, live wars in the world. You saw a drop in your market share in China, in Russia, and that perhaps transferred into the Middle East. So where would you say are you banking on for 2024 to bolster the numbers in champagne and in cognac?
Well, we're optimistic on the American markets, as we think that we have gone through this kind of readaptation, and it's back to normality. We continue to be optimistic to continue the very nice growth we had in Southeast Asia. Travel retail has been doing very well for us. So travelers have been out there. They've been buying in airports at a very high rate, and we hope to continue that. We continue to believe in most parts of the world, but we also are concerned, of course, about all geopolitical situations which are...
How much attention do you pay to that? And I ask you that question because people in this room will have lived through the supply chain crunch. We've got issues in the Red Sea. Huge amounts of global floating trade are now being diverted around the south of Africa. How concerned are you about a jolt in the global supply chain?
Well, we all know how important supply chain is, and if there is a problem through the passage through the Gulf of Aden and the Suez Canal, I mean, it means, of course, an impact on energy costs. It means an impact on transportation timing and all that. I mean, we have decided to change to a few years ago to 100% transport by sea. We don't do any air freight anymore for sustainability reasons.
So this is a particularly...
That was the Moët Hennessy CEO at a national retail federation speaking to Bloomberg's Manus Cranny. How's this for champagne in France? The number of bottles shipped in France has now dropped to its lowest level since 1985. That market is struggling. Okay, coming up, we're going to talk markets again with Robeco. That's Colin Graham, head of multi-asset strategies, right here on Bloomberg.
Women, on average, have about a 30% lower, I guess, amount of money saved up for retirement compared to men.
Yes.
So what are you doing about that?
Yeah, so we launched a campaign called Retire Inequality. And we do know that women retire with 30% less. Women make 83 cents on the dollar. And so there's a couple of things that we're doing. One, it's having this conversation and making sure that we all are aware that there is a gap. By the way, women live longer than men, so longevity risk is a real factor. Secondly, it's about making sure that we are talking to women about what can you do differently. And so whether that's negotiating pay and what are some tools that are out there, making sure that you take the time to negotiate, because we know women do not negotiate as much as men, which puts you at a disadvantage to start. But then also along the way, making sure that women are securing their own retirement, and that as part of their retirement plan, we're having much more conversation around guaranteed income as well. And so ensuring that we understand what are the nuances for women. If you think about COVID, 2 million women exited the workforce. They did not continue to contribute to their 401k or 403b plan. And so how do we make sure, as a matter of policy, as a matter of engagement, that women can have an opportunity to catch up, that women can understand that if you exited the workforce and now you're back, that that's 2 years of compounding that you were not able to take advantage of, and how do we continue to make sure that we're educating them and giving the tools that they need to get back on track.
Could face bigger challenges next.
It was going to keep rain World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
From our studios in London, I'm Danny Berger. It's 11 a.m. here in London. U.S. markets are closed for the Martin Luther King Jr. holiday. Welcome to Bloomberg Markets. Here's what you need to know this morning. China's central bank holds a key interest rate as currency woes give way to what some will believe be a difficult year. A U.S. fighter jet shot down a missile fired from the Red Sea from a Houthi militant-controlled area of Yemen. And U.S. lawmakers released a stopgap spending bill to avert a government shutdown as Iowa Republicans brave frigid temperatures on their way to today's pivotal caucus. Well, if you are in the U.S., you don't get to trade today, at least for cash markets, but hopefully at least you are staying warm. European stocks, they've been up and trading down about 1/4 of 1% or 1/5 of 1% 1% rather. And that comes off the back of Friday when the pivot party was in full swing. We got weaker than expected PPI ever so slightly. Month over month was down 0.1%. The expectation was for a growth. That meant we fueled those rate cut bets. Now for March, we're betting an 80% odds of a cut from the Fed. Meanwhile, for your U.S. 10-year bond future, again, cash market is closed. We are slightly lower after that rally on Friday. The front end lowered by about 23 basis points off the back of that PPI data. Finally, the euro off of its lows this morning, but still weaker versus the dollar. Now, initially, the euro had strengthened after data came out from Germany showing that it continued to dodge a recession. That despite shrinking output at the end of 2023 and across the year as a whole. It was a revision to the quarter prior that allowed Germany to avoid a recession. Still, the mood on the ground in Germany isn't necessarily reflecting that. Joining us now is Bloomberg's Oliver Crook, who is in Berlin at a protest that has to do with the discontent for the government. Oliver, you could say, look, the data is not so bad. We're not in a recession in Germany, but the reality on the ground is much different. I mean, you can hear it in the crowd behind you. Why is there so much public anger against the Schultz government?
Connection lost.
Yeah, exactly. A couple of basis points above zero or under, it doesn't really make a difference. At the end of the day, the German economy contracted last year. There's a good chance it could contract again this year, and they've had to make some very tough decisions around the budget. Remember, there was a 60 billion euros that just evaporated after that court ruling at the end of last year, and we talked about it in kind of figurative sense and vague senses. This is where the rubber hits the road. These farmers are now had these subsidies subtracted. The government has backpedaled on some of that, but guess what? Pandora's box is open. You have literally thousands of tractors that are piled miles long here around Germany and around Berlin. They have come to park them right on Schultz's front lawn. Right now, as we speak, there is a rally going on. We're hearing from some of the associations of farmers, but also trains. And Christian Lindner, the finance minister, is standing on stage right there right now. He's going to speak very shortly. This is a crowd that is not favorable to him. They're very hostile towards him. Every time you hear Schultz's name, you hear boos from the crowd here. So really, this is a very challenging moment for this government, which is facing basically its lowest levels in the polls since it took over.
What is the outlook then for the economy now that we have a quarter of a contraction in hand with the 2023 GDP? Are there hopes of a recovery at this point?
So listen, you look at the average economist survey, they say there is going to be a bit of growth this year. They say about 0.3%. But if you ask Commerzbank and Deutsche Bank, they both see another year of contraction here in Germany, which is really the last thing that they need. And you add to that the very sort of strict borrowing limits that this government and that Germany has imposed on itself. They can't really debt finance to try to stimulate things. So that's the condition that they find themselves in. And really this thing that used to be historically an advantage to the German economy, this massive industrial base, you've seen that industrial output shrinking for the last 6 months. And what is going to turn that around? It's really hard to see that trend changing, particularly with the price of energy, the labor shortage, and the cost of labor. All of this culminates, again, out of the abstract and into the reality, and now the political reality of those facts.
So, Oliver, what does all of that mean then for the state elections that are coming up in September?
Yeah, so Danny, I mean, you look at the polls, the chancellor right now has got about 19% approval rating. That is the lowest since they started doing these polls back in 1997. That's Olaf Scholz, so really just plummeting in the polls. And it's true for the whole coalition. And the only people that have seemed to be surging are the CDU, who are doing all right. But really, it's the far right in Germany that has surged. It is now the second party, the AfD. And you have state elections, 3 of them in September. And if they were held today, the far right, the AfD, would sweep all 3 of them, which is really an event without precedent in modern German history.
Oliver, thank you so much. As Bloomberg's Oliver Crook, a very lively crowd behind him. Will be interesting to see how much more lively they get when Christian Lindner steps on stage. Okay, it's about 5 minutes past 11 a.m. here in London. U.S. futures are down about 0.1%. Small cap futures down about 0.25%. But Evercore's Julian Emanuel is looking ahead to the earnings season that just kicked off with the big banks in the U.S. He writes, quote, amid geopolitical catalysts and overly optimistic earnings earning expectations. A VIX under 13 is underpricing market volatility. The base case remains for a first half market correction. Joining us now is Colin Graham, head of multi-asset strategies at Robeco. Colin, what do you make of that? Is this market headed for a correction?
Yeah, I have to say I would have some sympathy with those views. We think that the Goldilocks or the no landing scenario is probably priced into markets now. So if you look at the balance of risks, there are more downside risks than upside risks from here. So yes, we are respecting the momentum in the equity markets and the bond markets. However, we are concerned that at some point in the first half of this year, you do see a correction.
So yes, the market has been moving quite forward, especially in the fourth quarter of 2023. But what do you make of earnings expectations? Because here is an area that has not kept up with the entirety of the market. In September, expectations for S&P 500 growth for earnings was something around 7%. Colin, it's dropped to 1% as of the end of last week. Here's the chart. It's a pretty precipitous drop. How low is this bar? Is this an opportunity potentially for the market to get more juice this earnings season if expectations are so low?
I think this is the normal procedure you see where earnings expectations get downgraded before the actual numbers come in. And if you've been an earnings bear for the last 12 months, you would have been severely disappointed because companies continue to generate earnings ahead of what their expectations are. And indeed, not just focusing on the earnings they've delivered over the last quarter, but also the outlook has been pretty okay, mainly because inflation has been coming down. You've seen massive pro-cyclical fiscal stimulus going into the economy. The consumer's held up well, and indeed the labour market's held up well as well. So from that perspective, spending continues, and therefore, as long as the margins remain where they are, then top-line growth will lead to bottom-line earnings growth.
Colin, you write about this idea that you're not in the soft landing camp, that there will be a slowdown, and that will be due to stress in business models that relied on free money and QE. Does that imply then that you reject this idea that the Fed put is back, that any stress in the system will result in potentially more rate cuts or even QE from the Fed?
Yeah, I think we're really in the camp that in order to see 6 rate cuts in the US and 5 in Europe, that you'd have to see an accident happen there. It does not feel like the normal environment, given the wages are growing between 3 and 4%. We've seen a massive disinflationary shock from China into the economy as well. So, these things are changing this year. So, for us, we think that the bond bulls have got over their skis in terms of rate cuts this year and where interest rates should be going. So we use that as an opportunity to say, well, our base case is that, okay, Fed rates, ECB rates are going to be higher for longer than expected here. So we're looking at those opportunities. So where we see strong earnings growth in the IT sector and some of the industrials, and avoid some of the where we're seeing earnings more struggling in the sort of more cyclical areas.
What do you make of banks in this environment? I mean, we heard from Bank of America, from Citi. They had issues when it came to their traders. They're both restructuring. Citi is chopping a bunch of employees. We're going to get more earnings coming up. From a macro perspective, the banks struggled last year, even when rates were moving higher. What happens to banks in this environment where it is higher for longer?
Well, I think it's the net interest margins that really matter here. And you can see that actually from that perspective, inverted yield curve is not the great environment for those banks because they want to lend at a higher rates than they borrow. And so from that perspective, then that side of the bank's earnings will struggle. For me, we're focusing on where the crack's going to appear from higher interest rates. And we think that because people have termed out their debt, companies have termed out their debt, individuals have termed out their debt, think of US mortgages, that higher interest rates haven't really had the full impact that you would expect. And the pass-through's been a lot slower this time around than before. Put on top of that the fiscal stimulus, and again, you're going to see more fiscal stimulus this year with $100 billion. package going through Congress at the moment ahead of the U.S. elections. So, we have to respect that, because it just seems that this cycle is going to continue to extend.
One of the impacts of this cycle, Colin, has been the strange correlation between stocks and bonds, that in the past 2 decades, they had been deeply negative. That flipped to positive as the worry shifted more towards inflation. I was catching up with Ed Cole of Man Group last week, who basically said as we get more worried about growth yet again, that correlation can resume its classical negative relationship. What do you think? Or if we're saying, as you say, higher for longer inflation is still a threat, we're still going to have that issue where bonds as a hedge to equities doesn't quite work out.
Well, as part of Robeco's multi-asset team, then it's really talking my own book. We do expect correlations to start to turn more negative when interest rates and central banks have room to cut. Over the last 2 years, they haven't really had room to cut because the inflation has been so far away from their central rates. So one of the key theses we have is actually the easy disinflation has happened now, and what will happen is actually it's going to get more difficult to get from 4% down to 2%. So that's going to take much longer. So the economists that have plotted their charts and just extrapolated straight down, we don't think that's going to be the right path for inflation. If you look back through previous cycles where you've seen inflationary spikes, these spikes come in waves. It's not just one and done in terms of one spike of inflation comes down and everything's back to normal. You generally see a secondary wave of inflation, and that's what we're sort of focusing on, looking for those signs that actually expectations have got too dovish in rates markets.
Hey, Colin, even if you're talking your own book, love that you're honest about it, because, that's what everyone does. It's good to hear that you're honest. Okay, speaking of talking your own book, one of the things I want to get your take on is you're long on Japanese equities. The Nikkei trading at a 34-year high. How much juice is left in that trade?
We think there's more to go here. There's all changes. Having been a long-term bull on Japan, having made money and lost a lot of money in Japan on Japanese equities and indeed on the currency, then I think that when I look at the changes that have gone from a bottom-up perspective, I think it's much different than we've seen before. So all the hype around Koizumi when he got elected, but ultimately didn't manage to make all the changes he wanted, you're starting to see those changes come through. So it's really coming from a bottom-up perspective. You talk to the stock pickers here at Robeco, who from a fundamental perspective will go away and look at all these companies and what their earnings are and what their outlook is. It's become a lot more shareholder friendly in terms of the earnings expectations. And you're also seeing some changes in legislation, thinking about the tax treatment for equities versus bonds, and the government looking at that as well.
Hey, Colin, we're going to have to end it there. Thank you so much for joining this morning. That is Colin Graham of Robeco. Okay, coming up, the conflict continues on the Red Sea, leading to further disruption in the shipping region. We're going to have more on that next. But first, here's your check on bonds. Yields moving higher after stronger Germany GDP data.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
The 2024 nominating contests are here, and the candidates are making their cases to voters in Iowa ahead of the caucuses. Bloomberg is live in the ground, bringing you the fastest news.
Trump is leading by a long shot.
Insightful interviews.
And at the end of the day, that's what the American people want.
And the most informative analysis about what it all means for November's presidential election.
What is your path to the nomination?
Coverage starts today, only on Bloomberg. Context changes everything.
It's Bloomberg Markets. I'm Danny Berger here in London. Qatar paused sending liquefied natural gas tankers through the Bab el-Mandeb Strait after the U.S.-led airstrikes on Houthi targets in Yemen raise risks in the vital waterway. Here for more is our team leader for European energy, Rachel Morrison. Rachel, it's funny, we were just talking about during the break, and you put it so well how last year, we'd freak out about anything relating to the energy space. And here now we have this geopolitical conflict that's no longer just about commercial shippers. It's now about LNG tankers too, having to divert. Why aren't prices moving more?
Yeah, the Qataris were one of the only countries that were still sending shipments of LNG, which those have now paused. We've seen 5 tankers with our ship tracking data that have paused. Now, these tankers can take another route. It will take a bit longer, but essentially, we can still get those supplies. So markets are feeling a bit relaxed about this because we've still got enough gas. We will get these supplies eventually. And of course, Europe gets a lot of LNG from the US, and those routes are unaffected. So it's really quite a small amount of supply, and it's only delayed rather than totally disrupted.
What about the demand side of the equation? Because obviously it's very cold outside, as you and I both know, coming on our way, and not just in Europe, in the US too. Is there enough supply to cope with that type of demand?
Yes, what we will see is the impact on shorter term prices. So mainly in electricity markets, those kind of intraday spikes where people come home and turn the heating on, we will see an impact from the cold there. On the longer term, the sort of month ahead gas contracts, which is the benchmark, we're looking at the forecast for next week, which thankfully look a little bit warmer. So that's why prices haven't moved a lot on the cold weather. But obviously when you're walking around, you feel it and you think, what must be happening to gas prices? But we will see on the short term an impact.
To be fair, I'm one of those people that's not adding too much to the gas prices because I literally only heat the room that I'm currently in with a space heater. So maybe everyone has also learned to cope with less energy. So, okay, so if you have cold weather and then you also have the disruptions in the Red Sea, not yet having an impact. When you look at the timeline of potential diversions in the Red Sea, is there an amount of time that this conflict stretches out that you say, okay, now the impact is going to come to shore? Is it about time, or is it also about a spreading of the conflict?
I think it's mainly for gas markets about a spreading of the conflict. If we see the conflict move to areas where there could be physical disruption to supplies, then that, of course, will impact prices. And I think we're looking at options, we're looking at where traders are seeing that risk. And obviously, at the moment, the risk is increased, but the disruption hasn't happened yet.
So traders are actually finding places to price this in, though?
We have seen some in the options market, some options with higher prices. And also, we've seen a real floor at 30 euros per megawatt hour for the benchmark gas contract. Prices do not want to drop below that. We're watching closely every day to see if we can get to a price that starts with a 2 instead of a 3, and the market does not want to go there. So that just shows the kind of resilience that there is with prices. But yes, there's obviously the upside risk, and we've seen from last year the volatility. If the market starts to rise, you want to get in on that rally as quickly as you can.
Yeah, but as you're kind of pointing out, clearly still just a tail risk at this point. Rachel, thank you so much for joining us. That is Bloomberg's Rachel Morrison. Now, let's get to the actual details of what's happening in the Red Sea. The U.S. says it has shot down a missile launched from Houthi-controlled Yemen towards one of its Navy destroyers operating in the Red Sea. That also had the knock-on effect of what happened to the Qatar LNG tanker, as Rachel was just telling us. Let's now get to Honor Ant, Bloomberg's managing editor for the Middle East and North Africa, who's in Istanbul. Honor, how is this incident potentially different from what we've seen previously in the Red Sea?
Well, yesterday's incident, that incident took place on Sunday when, as I said, Americans shot down a cruise missile launched by Houthi militants in Yemen at one of the U.S. Navy destroyers, the USS Laboon. It just came hours after what Houthis described was another joint attack by U.S. and U.K. Forces on their positions in Hodeidah region of Yemen. Now, this is just this just shows the continuation of the back and forth between the U.S. and U.K. forces, the combined military forces on the one hand, and this Iran-backed militant group that we're talking about, Houthis in Yemen on the other, since the middle of last week, which is when the U.S. and U.K. jointly struck numerous targets, positions believed to be held by the Houthis in and around Hodeidah region, across 5 different locations in Yemen, and that's basically where it brought us all. The security situation in the Red Sea, the southern Red Sea, remains precarious, as is clear from Qatar's decision to suspend some of its LNG shipments through the area, and both Americans and the British Navy are telling that merchant shipping should stay away from the danger zone.
Yeah, and we see the impact of that, right? We see the costs of shipping rates soaring, doubling since September, I believe it was. You also see insurance picking up, too. Where do we stand on disruptions via the Red Sea? What are shippers saying? Is there any hope that they can use this route in the near future?
Many major operators, including some oil tanker operators, have recently announced that they are not going to use this waterway until it's safe to do so. And definitely Qatar's decision to suspend, at least not divert, but suspend at this point to some of its LNG shipments that were supposed to go through the Bab el-Mandeb Strait adds to the volatility. But on the other hand, as Rachel pointed out, at least for some of the goods that are being shipped, the markets seem to be sort of shrugging off the impact because yes, it's a critical waterway, but on the other hand, there's always another alternative. Yes, it's costly, it takes more time, but sooner or later you get the goods, gas, oil, whatever it is, to the destination that you are targeting, and there are also alternative sources of those fuels, those goods at the moment. But if it were, let's say, the problem was at Strait of Hormuz, then it would be a completely different ball game because the risk would be much higher. But at this point, I think most markets seem to be sort of seeing pass through the increased risk to shipping in this particular area.
And you know, it's been quite remarkable, Honor, especially looking at something like oil. We got above $80 a barrel on Friday. It's easily back below that now. Now it's 77 for Brent crude. In October, when Hamas attacked Israel, which was now over 100 days ago, you had only that initial war premium priced in very slightly, with many folks hoping that there wasn't an escalation risk. Where do we stand on the escalation risk of potential involvement from Iran? If at the moment what we're seeing is increased attacks from the Houthi rebels, who of course are backed by Iran, coming into nearly direct conflict with the U.S., the UK, and their allies.
The risk was always there from day one, and I think that was one of the things that markets, as you said, tried to have an understanding of and engage to the extent it's possible, although obviously it's very difficult to do that. And we have seen signs of that risk of the war widening to regional conflict since pretty much very early during in the ground invasion of Gaza by Israel. We've seen attacks on American forces in Syria and Iraq. As you said, we've seen increasing attacks by Houthis on commercial shipping in the Red Sea. So that risk has been there since day one, but on the other hand, I think so far both Iran and its proxy forces in the region on the one hand, and also US and Israel on the other hand, have been somewhat careful not to completely push the conflict out of proportion and sort of cause a spillover across the region. And I think that's where we stand right now.
And on that note, Honor, just quickly here, about 30 seconds, I mean, where does the tone stand from the U.S. in trying to encourage that not to happen either?
Yeah, that's true. Especially American President Joe Biden also over the weekend highlighted the fact that Americans were also working behind the scenes to have that message going back and forth between Washington and Tehran, so that no misstep, no miscalculation, so to speak, in this conflict results in a sudden sort of spillover of the conflict.
Honor, thank you so much for that. That is Bloomberg's Honor Ant. At the moment, oil prices falling some just under 1%, 0.8%, $72 a barrel for WTI, 77 for Brent crude. Coming up, we speak with Capital Economics. That's Jennifer McKee.
Maybe I should go do something else. I can't do anything better than I'm already doing. I already turned this company around. I've made a lot of money for the investors, the shareholders, and yourself. Are you happy doing this? You're going to do this for the foreseeable future?
I'm going to do it for the foreseeable future. I love what I do, and the reality is we've accomplished a lot. As you described, we've made Blackstone a lot of money. We made our shareholders a lot of money. More importantly, we've grown the business, and we've been a huge engine of opportunity. If you think about all the jobs we've created around the world, all the communities we've made better places, all the ownership groups who we've helped grow their business, and having built a world-class culture, the opportunities we've created for upward mobility for people. And this business, I would still say, is like a coiled spring coming out of COVID particularly. So I feel like we just have more to do. My job's far from done.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. How has that shaped your strategy for the bank? Is this a new normal? Is this like a catalyst? Do you think we're in a new phase for dividend policy overall? That's a great question. I'm Francine Lacroix, and this is The Pulse, every weekday at 9 a.m. only on Bloomberg.
Welcome to Bloomberg Markets. I'm Danny Berger. China's central bank holds a key interest rate as currency woes give way to what some believe will be a difficult year. A U.S. fighter jet shot down a missile fired in the Red Sea from a Houthi militant-controlled area of Yemen. And U.S. lawmakers release a stopgap spending bill to avert a government shutdown as Iowa Republicans brave frigid temperatures on their way to today's pivotal caucus. So yes, they're up and voting in Iowa, but markets are closed. At least the cash market is trade is closed for this MLK Day holiday. European equities are heading lower by about 0.4. U.S. futures markets are also lower for the U.S. Yes, they had thought to rally at the end of Friday. It was that PPI data that really ignited yet another round of rate cut bets. 80% is what's priced in for March, though that rally has given way to some declines for the U.S. 10-year bond futures market. But again, liquidity is so low. How much do you want to read into this? Meanwhile, the euro is losing steam versus the dollar. Its initial reaction to revision higher for German GDP from the last quarter to avoid a recession was for the euro to strengthen. We're speaking with Freya Beamish of TS Lombard in the past hour, who said the ECB is headed for a policy mistake if they keep rates restrictive and they don't switch and they don't ease up on their QT. So the election year of 2024, it's officially kicked off. We had the Taiwanese elections over the weekend. And in the U.S., the race for the White House is shifting into high gear later today as Iowa Republicans kick off the presidential nomination race. You can see there that is Iowa, only a few people around given it's 5:30 in the morning and just so extremely cold, negative 25 degrees Celsius. Donald Trump is heading into the caucuses with polls showing a commanding lead over rivals Nikki Haley and Ron DeSantis. So yes, they're slowly filling up. They're getting ready to vote in that caucus center in Des Moines. Here in London, Kriti Gupta joins us for analysis. Kriti, what are we expecting when that caucus fills up, when people go to vote? What's the outcome expected to be?
Well, the polls right now suggest that Donald Trump is going to be the clear winner, and by a massive margin. I think the last poll coming out of the NBC partnership with the Des Moines Register in particular showed that he was leading with about 48%. That is about a 28-point margin to Nikki Haley. It's the largest margin in GOP history when it comes to the Iowa caucus, which I think really speaks to just how much support he has in a part of the country that he's kind of had a love-hate relationship with, for lack of a better term. Right now, I think all eyes are not necessarily on who's going to be the front runner, but who's going to take second place, because like I said, Nikki Haley at 20%, Ron DeSantis at about 16%, and the question is, both candidates could very easily be vice president if they don't surpass Donald Trump.
At the same time, Congress has been working to avoid a government shutdown. They have two deadlines now to come to terms with. They have released a temporary spending bill to avert a government shutdown. How much more time are they buying themselves?
Literally 6 weeks, and then we get to do this all over again. Mike Johnson, over the Speaker of the House, really trying to force this bipartisan deal, but as the curse of the Speaker of the House seems to be, any sort of bipartisan agreement that doesn't include some sort of either funding cuts to Democratic causes like infrastructure, like EVs, like even chips manufacturing or climate change, or favors more GOP causes like abortion control, like gun control, for example, or even immigration policies, towing that line is getting very, very difficult. And that's where Mike Johnson really finds himself, because not only is he trying to kind of uphold that narrative of Republicans as this party of austerity, this party of being fiscal conservatives and fiscal responsibility, but he's also trying to stay really in-house after, of course, the chaos that his predecessor, Kevin McCarthy, had to deal with back in October.
So then, I mean, given that, what sort of are we hearing criticism from coming together with a plan, but potential bipartisan plan with Democrats from that further right contingent?
Yeah, there's a lot kind of going on right now. When it comes to the actual deal or nitty-gritty of the deal, it's actually unclear what that is. It hasn't been fully released yet. What we do know is that if this bill, which, by the way, it is bipartisan, but it's also not 100% cleared yet. That still happens on Friday. They're waiting for the votes to come in, but it only requires 4 Republicans to vote with an entire Democratic support system. So the bar is fairly low to get this across the hurdle, but it would then only fund energy, defense, transportation, again, only for 6 weeks. And I think this is really where that fiscal conservative piece of the equation really comes in handy, because then connected to what you're seeing in Iowa, this is exactly what the candidates are lobbying for. Nikki Haley very vocal about kind of getting the U.S. finances in order, and it feels like Donald Trump and his counterpart Ron DeSantis, even though they are leaning into that concept of tax cuts more, they don't have as thought through of a plan as Nikki Haley does, and some people are saying that that's going to be her kind of winning glory.
Yeah, there could be quite an awkwardness with a mess among Republicans in Congress while the Republican caucuses, the Republican primaries are ongoing. Kriti, thank you so much for joining us all day on this. That's Bloomberg's Kriti Gupta. Joining us now is Jennifer McEwen, Chief Global Economist at Capital Economics. Jennifer, it's an election year. It's an election year for more than half of the world's population. For the U.S. specifically, how could the contours of this race change at all the fiscal tightness or looseness that we're expecting to perhaps aid a soft landing or increase inflation?
Yeah, I think that the key point to make here is that really whether either the Republicans or the Democrats are going to be very much constrained in terms of fiscal policy. Obviously, the U.S. debt is already high. We've already seen some evidence of some slight market concern over that, so nobody will want to do too much to disrupt that balance. But at the same time, none of the key candidates have proposed a major tightening of fiscal policy. So I'm not sure that we're looking at major changes. Maybe the bigger effects could be distributional ones.
There is right now, though, Republicans and Democratic negotiators trying to reach an agreement over tax cuts, hoping to expand tax breaks for the start of the next season, things like the child tax break. How do you model in that type of fiscal easing into an economy that, again, is already widely expected to avoid a recession?
Yeah, well, I think you've got to try and offset that against the effects of monetary policy tightening. What we know is that the transmission of monetary policy is delayed, it's lagged, it's very uncertain. So at the same time as trying to factor in the implications of any fiscal loosening that we might see, we need to try and think about how long that monetary tightening is going to take to have an effect on the economy. And I think it's pretty likely that those lagged effects will be offsetting the effects of the kinds of fiscal policies that we've seen mooted so far.
We were just speaking with Colin Graham of Rubico in the past 30 minutes, Jennifer, and his take was essentially that if you take together the tax cuts, some of what's happening with energy, shipping rates, the fact that the easy inflation has gone out of the system, the next part is hard, that there is a risk for re-acceleration of inflation. Would you agree? Do you think that there is that risk present in the American economy?
Well, there are always risks in both directions, but actually, at Capital Economics, we think that the risks are more skewed to the downside for US inflation, actually. I wouldn't read too much into the stickiness of core inflation at the end of the year. It's partly reflected used car prices, which we know from latest auction data are going to come down, and also rents, which again, we know from newly agreed leases that all of the signs point downwards in terms of rental inflation. So I'm not too concerned about that stickiness. Going forwards into the rest of this year, I think there's every reason to expect US core inflation and headline inflation to continue to moderate. Yes, there are risks around shipping, and we're watching that very closely, but one point to remember on shipping is that while spot rates have risen very, very sharply, most shipping agreements are over longer terms. So it's the contractual rates that are really important, and those are still relatively low. Even when we saw kind of fourfold increases in spot rates during the pandemic, the impact on headline inflation across the advanced economies was just a few tenths. So you wouldn't expect this to directly, at least, have a major impact on the inflation path. The bigger impact will come if commodity prices really start to surge, which isn't something we've seen so far.
Jennifer, we're also going to get UK CPI in the middle of the week. Last month, 3.9% was the year-over-year rate. Are you expecting a pretty steep come down in UK CPI? We were talking earlier with Union banker Privé, who said that sterling is too strong, that traders don't quite realize that the come down we're about to see in UK inflation. What's your expectation for this week?
Yeah, well, for this week, we're expecting just a very slight reduction to 3.8%. That would be, though, be at odds with what we've seen in the US and the Eurozone, where we actually saw inflation nudge up in December. That partly reflects how the UK energy market works. Prices are regulated by Ofgem, and therefore the implications of previous increases in energy prices will come through a little bit later. So we might actually see an increase in headline inflation in the UK going into January. But that aside, looking forwards into the rest of this year, we think that the continued weakness of the economy is likely to continue to weigh on inflation, as well as base effects in the energy component. And we would expect inflation to fall back pretty sharply. And in fact, by the second half of this year, it might be below the rates in the US and the Eurozone, which would be quite a turnaround.
Jennifer, really thanks a lot for your time today. We appreciate that. It's Jennifer McEwen of Capital Economics. Okay, now let's turn to luxury, where we see a sign of softness. France's champagne producers shipped fewer bottles of the bubbly last year. In fact, foreign shipments from the French region dropped 8.2%, according to the Champagne Comité. Bloomberg's Manus Cranny spoke with the Moet Hennessy CEO at a National Retail Federation panel yesterday.
At this stage, I think you have to take it as a context piece, which affects what you do on a day-to-day basis. We have set up 2 years ago a team which we call Revenue Growth Management, which what they do is that they simulate the effects on the consumer elasticity of price increases, so that we, on one hand, we are trying to adapt our prices to inflation, also the inflation of our costs, because grapes get more expensive, salaries go up, transportation is more expensive, and very importantly, glass has become much more expensive. You know, in some products, glass can be up to 50% of the cost of a product. So if that goes up, you have to adjust for that. So revenue growth management will, on one hand, you look at adapting your prices to your cost, and on the other hand, of course, you try to mimic what will be the elasticity of your demand in the different markets, so that you kind of predict what the impact be, and you kind of readjust on that base.
One of the great accusations that I've come across is that the retailers and the producers jacking up prices, gouging the consumer, greedflation. Push back against that. I mean, is there any hint of truth in any of that, or is it just overstated?
No, that's clearly overstated. I think what we all try to I mean, there's customer elasticity. If you go too far on your price side, you are going to lose out. So it's clear that we need to cover our costs, and costs are increasing. Sometimes we anticipate cost increases. Sometimes we come behind, but we have to adjust. But I think in the world of luxury, which we are operating, of course, with every price increase, you have to think about your product. Does the product yield that value? You know, in the last years, as long as I've been in this industry, there's constant investments in improving the product. For instance, since I've been at Moet Hennessy, we have gotten rid of insecticides. We have gotten rid of herbicides. That has created additional costs, but it also gives us a better product at the end. And so we are constantly investing in making our product better and better. Of course, that is on the product side, but then you have to transmit that to the consumer. And the consumer, the way you transmit it to the consumer is, of course, at the point of sale. So, and here we are back to retail. So what does retail do to the consumer, and how do we bring over to the consumer the fact that we sell quality products, and yet their prices increases because of inflation and because we constantly invest in them, and yet we want to seduce the customer to stay with us or come to us as we go this way.
The Moet Hennessy CEO Philippe Schaus at a National Retail Federation panel speaking to Bloomberg's Manus Cranny. All right, U.S. markets are closed, but let me show you what Japanese markets did. The Nikkei still trading at a 34-year high. Yields come down in Japan on the front end, giving the BOJ some more breathing room. Meanwhile, yen continues to weaken. Okay, still ahead, Apple's rare discount on the iPhone 15 in China. That's next here on Bloomberg.
How are you feeling right now about the state of the industry and what it's going to look like in the next couple of years?
The big picture is it has never been more, I would say, volatile. I mean, it has, but it continues to be volatile. But like you said, we did see real signs of life this summer. So generally speaking, box office is down globally around 20% to 2019, so pre-pandemic levels. But this summer, it was 5% down, right? So it would suggest that even though there were winners and losers of this summer, and obviously we had the two big juggernauts with Barbie and Oppenheimer, movie-going begets movie-going, right? So when there's a season filled with, good movies that people want to see, I was made to feel pretty optimistic about what we saw in the summer.
Could face bigger challenges next.
It was going to keep Green World Cup. This is a 3
as the economic picture
covering the intersections of Hollywood, Silicon Valley, and beyond.
Welcome back to Bloomberg Markets. Davos is in full swing. It kicked off today, and Bloomberg's Francine Lacqua caught up with BlackRock Vice Chair Philip Hildebrand.
The last year has been a story of pandemic savings that have been run down by consumers, so very strong consumption. And then we should not forget government spending has increased dramatically, particularly in the U.S. And so you've seen these two forces that have kind of been a countervailing force to the contraction that we've seen in capital markets through tighter interest rates. Probably most people have been surprised. The question